If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream. All right, everybody, welcome back to another live stream. Hope you're doing well. Last night we had the Nvidia earnings, and we did get some, it's got to be a really frustrating thing if you are somebody who, you know, buys calls, buys puts, and tries to play the earnings, if you will. It's similar to, you know, in the foreign exchange and futures world, people will try to put like a buy stop and sell stop on either side of like an NFP event, for example. Like somebody will go to, I used to do this a long time ago. I tried to do this. I actually even programmed a robot to do it. And there's a critical error that you might not know about. But anyways, what people will do is they'll go, you know, down to like a 5-minute chart ahead of a really big news event, and they will try to hypothetically, let me see if I can get a good example. They'll hypothetically try to put like a buy stop and a sell stop around price. And so when you get some kind of huge move, the theory is, oh, I'm buying, right? And then I can catch that wave higher. Or if it sells off, you sell stop into the position and now you're in the trade. And it's a really good idea on paper in the sense that if you could get filled easily and just ride a explosive move higher, theoretically, if it's a very binary event like that, you should be able to make money pretty easily. The issue in practice is that spreads become very, very expensive. What I mean by that? Well, the bid ask, right, is what your broker will offer you. Let's say you want to buy euro dollar. Instead of filling you here, even though the price is close to there, the ask is way up here. So you get filled up here. Now, in this case, it worked out perfectly fine, but this is the candle right here. That kind of candle is the candle that messes you up because you're like, you get triggered in and you're long here, and then your stop loss gets nailed, right? And then it moves in your favor. So anyways, the point is trading news events and trying to trade earnings in the stock market world can oftentimes be very similar. Here is Nvidia on a 5-minute chart, and you can see exactly what I'm going to get to on this point. Is that if you were somebody who bought a call on Nvidia, their earnings report last night, you're looking at Nvidia and you're saying, okay, I want this thing to go up. But here's the thing. If you want Nvidia to you know, somebody is not going to sell you that call for cheap, right? If you're going to get a call option on Nvidia, and the popular one last night looked around to the like 205s to 210s. There was a lot of call volume in this range, right? So you had a lot of people who wanted to buy calls. And so what call sellers will do is they will charge a very hefty premium in order for you to potentially make big money on an earnings release. Last night, the winner on Nvidia earnings was the market maker. Who's the market maker? It's not this ominous, creepy figure that you kind of think of in the. I know I'm talking about people who sell calls, sell puts, people who set the bets in the form of the options market, because this thing went nowhere, right? We just chopped up, we went and chopped back down, and we are 1% higher here post close yesterday. So really not a very for when you're buying a call option, you need this thing not to just go up. You need it to go up a ton to exceed what you paid in premium for that added leverage. Anyways, loving the Edge Finder, mate. The 45% discount was unreal. Thank you. You're very welcome. Thanks for the feedback. I'm glad you're enjoying it. Just got my Edge Finder last night. So excited. Let's go. Exciting. That's awesome. Okay, so with that said, how does it impact the Nasdaq? Well, Nasdaq here this morning is actually slightly lower than where it was last night. The earnings, I think what happened yesterday is a lot of the excitement around Nvidia earnings got pulled forward. You can see the Nasdaq kind of rallied itself into the print, and that's because Nvidia is like 9% of the S&P 500. So stocks as a whole, trade around what's going on with Nvidia. It's so integral right now to the stock market itself. So S&P 500 here is pushing back towards those all-time highs. I am watching to see if we can get a technical breakout to the upside. Specifically, consumer confidence came in better than expected recently. And if I take a look at asset scorecard here, switch over to, let's see, where am I going? Nasdaq. If I'm looking at Nasdaq, fundamental score has flipped a little bit more positively. We also have a technical score here of +0. So technical is a little mixed on Nasdaq. Sentiment and COT data slightly positive with some institutional buying on Nasdaq specifically. However, S&P 500 here, not so hot. So if I take a look at SPX, you can see COT data giving us more of a bearish reading, with institutions actually pretty net short on SPX and also selling positioning in recent filings. So we do see some shift to bearishness. Shout out to my wife. She just brought me coffee. Ooh, that is good. How many points do I expect Nasdaq to spike in news? Which news event are you talking about? So let's see what else is moving. So Nasdaq, S&P looks a lot healthier than Nasdaq, I have to say. Tech stocks are still under a lot of scrutiny. I did want to check the IGV following the Nvidia earnings release, and you can actually see in the aftermarket. Let's go. Where's aftermarket? Today is, so here it is. So this was like after the bell. You actually saw IGV trade lower and then recouped its losses. So pretty much flat. So we'll see. Dow Jones also looking real strong here, at least in the lower time frames this morning. Russell's also looking pretty healthy. Dollar index, take a look at the 4-hour chart and the daily chart. Daily chart still sitting here at resistance. I'm very curious to see if we can actually get the breakout above 98 that we've been talking about for a little while. US dollar as a collective or as an index, I do have a little bit more of a bullish reading on currently. So if I take a look at US dollar overall, by the way, I do think we are very close to having the other major currencies in there. We are just finalizing some of the infrastructure in the code base. We're almost there. Anyways, US dollar overall getting a +6 reading. Technical score looks good on the 4-hour chart especially. I think that I have to say, I think that this looks like it wants to break out. You've got this higher low sequence going on. Of course, that could change if something were to start, falling apart here for the dollar index. But I am looking for dollar index to make that push up and over that 98 level, at which point I think we have room to kind of expand into a bigger move. Nick, why don't you include global tension score, especially on gold and also inventories and oil? That's a really good point. It's a really good point. I think that at some point we may add those kinds of things into Edge Finder. especially for the oil inventories. I've thought about that. So don't be surprised if it does make its way in there eventually. Look at the DXY daily and look at it on an 8-month range compared to previous year's moves. Dollar index has been really range bound here the last few months. On a long-term basis, pull out to the monthly chart and you can see we are still in a very long-term upward trend on the dollar index. It's part of the reason I think you may be basing out here on DXY. The problem with this, and I'll point to my own logic flaw here. If you draw this trend line, right, you can also draw it different ways, right? You could draw it, you could have another trader draw it like this. That's why I don't love trend lines. The best kind of thing I think about with trend lines is just the general directional bias, right? Generally, if you were to just draw a line here, that's why, you know, one of the best ways you can do this. Where is this tool? This is kind of cool. Here's a little idea for everybody. Use the regression trend and just do this. See, what I just did there was I used the regression trend tool within TradingView and just plotted it from the start of this move here up to current date. And it just gives you a general view. I think you might actually, yeah, you can also set deviations. But generally, which direction is this chart going on a long-term basis? Up. But this is not something where I'm like, oh yeah, and so the next 3 months should be up. Nope. If you're looking at this type of time frame, you're saying so the next 3 years like should generally see upside. Doesn't mean we start going up for the next 3 years today, right? Tori will be sad that you don't like trend lines. Well, you know, we each have their, I'm not saying trend lines are bad. I'm just saying I don't really like them as much as horizontal levels. Because I feel that with with all technical analysis, all of it, it's subjective painting pretty pictures on charts, right? Let's call it what it is. It's astrology for traders. We're drawing stuff on charts and you know, hoping that it has some merit to it. But it works only if everyone else kind of sees the same stuff. So to me, I like to look at, right, the only way technical analysis would have any value is if it's something that people can see regularly, like that the everyday person and trader is seeing. If it, this is what doesn't make sense to me. Sometimes people get so fancy with their technical analysis. They get so fancy with it that it's like, I would have never seen the same thing you saw. And if not everybody is seeing the same thing, doesn't that kind of defeat the purpose of technical analysis, given that technical analysis is all about a self-fulfilling prophecy stuff, right? The whole point of technicals is that we all kind of see levels and a lot of people react to those levels. So I think that with the US dollar index, there's a lot of very clear, like this spot that we are at is very obvious. We have jobless claims coming out here. Let me just check in terms of the data release. I'm curious to see how last week we had a really good number. Another really good number here. Unemployment claims came in 212. That is better than expected. Not too bad at all. Let's see if there's any reaction here just real quick. 5-minute candle on the S&P 500, the Nasdaq, also nothing really big here. Dollar index, slightly positive. I am bullish on the dollar, so would not mind a little bit of rally there. I'm going to get stopped out of this oil trade, or I am, you know, I'm out of this oil trade. I'm going to move on from it. Moved lower here, and so taking my profits and moving on. Didn't quite get, I was looking for this. I was looking for this consolidation, brief pullback, and then just explosive move higher. Will I rejoin the oil trade? That'll depend. It is the strongest reading within Edgefinder for non-Forex pairs. And so, yes, I probably will find a reason to get bullish. Also, let me see, why is this mismatched? Okay, there we go. Yeah, one of these was not right. technical score losing a little bit of scoring here this morning. That's why that dropped in score a little bit. So anyways, I do like oil to the upside. Coming in on the conversation, we've got him in the back room here. We've got Chris Pulver joining into the call to go over some markets with me. Hey, Chris, how you doing, man?
Good morning. What's happening?
Not a lot. Good to see you back on the show. And what's the latest with you? What are you watching? What's interesting to you?
Well, we had a VIX up to 20 something this week, so I sold some more premium.
Mm-hmm. I thought about you when it was going up. I was like, oh, Chris is probably getting busy today on the premium selling side.
Yep. I got a good trade posted for the Dow, collected $3 and it's out to September. So that's kind of my bullish window is just trying to take advantage of this reasonable volatility up into the low 20s and basically kind of front load the resiliency into like September, October, and then be ready to kind of play defense maybe midterms into 2027. We're still getting the dispersion trade. It's an aggressive rotation. I'm sure you saw the Centrini research paper this week. That was like 100,000 word essay on how AI is going to disrupt, and it's basically a snapshot of 2028. And
I saw that
universal basic income. So it was pretty nasty on the IGV side. I did actually. I've got a trade running on. So I looked at IGV holdings. And it's top few. So we got Microsoft, Palantir, Oracle, CRM. I actually put in Broken Wing Butterflies for Friday, which will be kind of an interesting trade because I didn't get like a lot of credit up front for these trades, but I put them back down at the recent lows. So I'll show you what the charts look like here. So here's Microsoft. We're trading up to 401. I have basically a free butterfly trap by Friday expiration as long as we're above 382.50. So if price, I like that IGV is catching a bit of a bid, and some of these software stocks are catching a bit of a bid. I'm not surprised this is happening, but to me, that trade individually was very short term. Like I'm not positioning yet for any type of medium term, long term software recovery. I think the disruption is still there, but again, these are pretty good companies. I think a pop in a short term move. I mean, look, Microsoft coming back to 441 to 480 would be a great short term target. Get back to these same levels, and then I would be out of that trade just for safety, unless this is a bigger head and shoulders pattern or something like that. Anyway, that's Microsoft. CRM had earnings, or they have earnings today, I think, or they have them this morning.
They had them last night, and
okay.
I have a trade on, so it worked actually okay.
Okay. So they're down to 189. Earnings looks like they hit top and bottom, which is fine. I have this one 175 is my pin on Friday. So if we come back down to revisit lows by Friday. That one gives me, I think this one's like a $500 profit trap. Palantir and Oracle were the other two. Palantir's up slightly. It'd have to come down to 125. So again, pretty safe on like a, small income play, but profit traps of like $2, $250, $500. Oracle. This one I was able to go further out of the money. 148, and I've got it down here to these recent lows at 135. So coming into Friday's trading, we could see if that's nice little profit trap for me. Any thoughts for you, Nick, on Nvidia? They beat, they're starting to break out of these intermediate highs around 195. We're higher this morning. Mag's up a little bit. Earnings, beat. They're just revenue wise, they're killing like every Mag 7 right now.
Yeah. So that report was nothing short than just straight up impressive, like monster numbers. And yeah, I do have some thoughts. I've got a couple trades on very similar to yourself, Chris. Not the butterfly type of level of option stuff, but I do have just some simple sell puts on several of the names that you mentioned.
Okay.
Salesforce, I've got Oracle, Microsoft, CRM. I did buy some shares just outright of Intuit because the options chain was just not very liquid, or not very good bid ask spreads on the stuff that I was looking at like 45 days out. But anyways, yeah, so Nvidia was interesting because one of my bigger hesitations here, Chris, is with the software disruption stuff. I actually kind of think that there is more downside risk in the short run. But that in the longer run, I am not willing to say that software is, going to completely be made obsolete by AI. Yes, there's going to be a lot of individual businesses that that of course get disrupted, that maybe even made completely obsolete. And I think that software as an industry will continue to drastically change. But I think a lot of those companies are on sale personally, and wouldn't mind some assignment on things like Microsoft. Nvidia, the market maker won big time yesterday, Chris. This was a beautiful, I don't know if you were looking at it. I was looking at the call and put premium was just juicy out there. I didn't play anything on Nvidia, but it was like a market maker's heaven yesterday, because you had very little move in either direction. You had one jolt up, and then it just kind of erased and stayed there. As was it what it entails for the rest of the market. Clearly, there is still a huge, tremendous demand for data center build outs and for AI infrastructure and all this stuff. And I do think that is a positive. I think what happened yesterday is that we front runned it into the earnings report. You had a huge move higher intraday in the NAS yesterday. NAS was significantly outperforming, so it was a real nice little tech bounce yesterday. So I don't think that I think that the earnings release itself was sort of like, okay, we just confirmed all of the hype that we just kind of bought into this earnings report. So I think that we had an incredible report. It was a major beat. But for me, I'm still kind of in that document that you mentioned, the PDF, the Global Intelligence Crisis, the 2028 document that was all over the place yesterday or the last few days. Very interesting. I think it's a little bit, in my opinion, a little bit more doomsday than reality will. For sure. Be. But the point is, in the short run, in the here and now, it's causing a lot of jitters in markets.
Yeah, and that's why we've had like a third of the S&P up 20+% and a third of the S&P down 20+%. We've had sector rotation that's been one of the more aggressive ones in history. Concentration is certainly leaving the Mag 7 a little bit. It was kind of interesting to see that large caps step back up this week. Mags up a decent amount. Off these recent lows. Here's the Mags ticker that is up around 5.33% since the lows. Go back to equal weight, near the top, but so is the S&P as a market cap weighted. We got to just a small gap up on RSP this morning. We're within 0.8% of all-time highs on equal weight. If you go to, Nasdaq equal weight, this is certainly catching a bit more of a bid, which is kind of impressive considering Qs. It's like pattern-wise, I still just kind of hang out and wait. That's why I'm hoping that me selling puts below like April of 2025 lows is pretty darn safe, because the longer this thing chops around, what's going to be nuts is, oops, wrong. This is a VIX instrument here. The longer that we hang out on this chart and do nothing, it does beg the question, like technically speaking, if we get a daily or weekly breakout above this range, even if we just do that, that's the minimum. That's the minimum upside. And obviously the path of least resistance continues. I would then be looking to, as long as we stay above, let me use a trend line. As long as we stay above a trend line like this, then I can't be bearish, know, like it just, the party continues. This is what I'm saying. Like I'm kind of bullish into, so I'm selling premium as the market is choppy. I'm trying to find some individual stock plays, but I like the indexes just for lower volatility. If we do get a clean breakout, there's my new structure. As long as we stay above this black trend line that I just drew, then I'll be bullish. If this starts to roll over again, or at least the timeline of we come into, let's say, August, September, October, that's kind of the extent of me being like pretty bullish. Once we get into midterms, I don't know if you checked out the State of the Union this week. It just seemed like a rah-rah fest of Republicans are great, Democrats are scum, and I can't believe you do this to us. And, lots of immigration talk. So, what's funny is afterwards, I just did a prompt of like, give me a bipartisan fact check on the State of the Union. And it was literally every bullet point was false, misleading. It's like, that's State of the Union for you. And that's everyone. It's like Biden would have done the same thing. Obama, same thing. It's like they kind of fluff the numbers a little bit. There's just a lot of hyperbole coming out of Trump's mouth. And we'll see what happens. But I just thought, well, it's better than saying we're going to go to war with Iran.
Sure.
So markets at least caught a bit of a bid this week. And technically speaking, if we break out, I can't fight it. Underneath the surface, like we talked about, I think last week when I was on the show, having, the inverse ETF volume up to like 43%, and then fading back down to like 19%, getting, it's like sentiment. I actually haven't looked at AAII since last week. I know it just printed yesterday.
Yeah, let's do that.
So we're at 40% bearish. I mean, again, it's like this market has an amazing way of climbing that wall of worry. So we've got 40% bears, 33% bulls. If we break out above 7,000, I mean, I wanted to be a bear here, Nick. I really thought a low risk, high reward trade would be something like this, and coming into today's trading, like I might take a low risk stab at it. If possible. I mean, one trade that I would look at is like, could I do a, sell 6,800 call, buy a 7,000 call, like risk $250 to $500 and let this thing give me a range trade. If we drop all the way back down, I'd make like 20 grand to the downside and risk like $500. So that's not a bad trade to take a stab at something like that. But if it breaks out, I'm dead wrong because it's going to 72.26.
Yeah, and actually, there's a couple things that you mentioned there, Chris, that I think are interesting. So just looking at sentiment alone for a second, the picture here, we have looked at this chart every week for I don't even know how long. It's a really simple indicator, and for those of you guys who are new to what we're looking at, this is the AAII Investor Sentiment Survey. Nothing is the holy grail. No single indicator is all you need. You want to build evidence through as many useful indicators as you can. I'm not talking about technical indicators, although those can be useful too. I'm talking about, in this case, sentiment indicators, fundamental indicators. So if we're looking at the Investor Sentiment Survey, we have seen a persistent decline in bullishness. I can't help but think a huge chunk of that is the software disruption story, especially when I think that the average investor, the average person out there, and I'm not, speaking negatively about this because this is me too. A lot of people have software business companies in their portfolio. So they're probably feeling not great about the stock market, given that technology is the popular spot for retail to invest. We have seen bullish sentiment continue to decline and bearish sentiment continue to rise. And so when we look at that and we say, okay, sentiment is setting up for the contrarian perspective to be, okay, maybe there's actually a bullish breakout with some legs to it. And we could see this side of the aisle, right? Not politically, but bullish bearish sentiment flip back into the bull side. And so that is where, we love to see this as a risk reward indicator. And this is what, when I talk about sentiment, I like it from the perspective of risk reward, right? If you think about everyone is on one side of the boat right now, if everyone starts running to the other side, you have a lot of potential built up, potential energy that could turn into kinetic energy. That's what I remember from physics back in the high school days. Anyways, when we look at S&P 500, I'm with you on that. I think if you get a technical breakout here to the upside, things could get real strong. And some people would point, Chris, to the idea that, we've had some strong jobs data and maybe, that pushes back the probabilities of rate cuts. But I would argue, and I've said this for years now, I am a bigger fan of the labor market holding up tight and not really needing rate cuts than the labor market falling apart and we need rate cuts. Because I think that's a slippery slope.
Yeah.
And so when we I'll finish off just real quick with just a macro set for context, and then I'll throw it back to you. Jobs market data has improved. NFP report came in strong. Unemployment rate remains low and beat forecast. Jobless claims came in better than expected just now here today. CPI was better than expected. PMIs decently strong. Services PMIs and consumer confidence had a nice boost. All of that to say, fundamentals have slightly picked up. The macro story has slightly picked up for the indices. So I wouldn't be surprised if you start to see a technical breakout that there could be legs to it.
Yeah, and there probably are legs to it. I mean, it is path of least resistance. There's been a lot of like I said, the dispersion trade under the surface has been, honestly, this might be one of the more like impressive and non-index affecting rotations that I've ever seen, or certainly seen in a long time. Because the last time we saw, deleveraging to this extent, you're talking 2022, and that was not a good time for the indices when we're looking at 30+% drawdowns peak to trough. So the fact that we're like literally knocking on the door of all-time highs in the S&P and getting a bid on the Nasdaq. Again, the Dow's actually poked all-time highs across 50,000. Small caps, mid caps still looking pretty good. Again, like this to me is like the big path of least resistance. You've got the big beautiful tailwinds. You have, I think, until the markets maybe have to address some earnings compression or address some policy risk. I don't think there's really much to derail like the momentum here. But I mean, thinking out 12 months, I have a very different narrative on where I think we go. I'd obviously want to see some pretty clean structure, but big picture wise, I'm just looking at some really simple ways to just kind of either one, stay out of the market when things look a little rocky, or just sell a bunch of premium, stay out of the way. One of my favorite trades that I've been doing almost every single week is just taking trades where I go about 10% lower than price, and I set up a trade that it's about a $1 profit for a $4 risk, and that's the standard trade. So I'm looking at about a 25% return on my risk, but I'm 10% lower than price. But I also build these trades out where I get for every dollar that I can pull in, I have $1,000 profit trap opportunity that can help me make this a much bigger win. So I could technically win up to $1,100, only risking 400, and I'm 10% away from current price. So I've been doing a lot of those trades every single week, because if we just stay here sideways, Nick, and then we start to go higher, there's no upside risk in any of these trades. There's no sideways risk on these trades. And even to the downside, coming back 10%, but rallying off that, which I think that we would if we pulled back 5, 10, 15, even 20%, I think we find a rally into that September, October window. So where are we at that time? I have no idea. I mean, if we're at 7,200, great. If we're at 7,500, fantastic. But coming into the end of the year, I wouldn't necessarily say we're going to be bearish into the end of the year, but I think rolling over into 2027 would not be a surprise if we're sitting here again at all-time highs.
Sure. Yeah, no, I think it's an interesting time for sure. We have some jitters around the AI trade, but I think where I have some issue is like, if I look at the software world, I think that this one, I've talked about this before to you, which is the difficulty that I see on this is that I don't know how this resolves in short order. Like, I don't know where with software jitters, this kind of just like everyone lets that go. I compared it last year around this time to the April sell-off that we saw due to the tariff stuff, which, although very sudden and urgent and scary, was also something that could be taken away at any time, and it was taken away. The challenge here with software to me is that I don't know how you take away that fear, on a quick decision. There's nothing that comes to mind that could just kind of suddenly make everyone, oh yeah, software is going to be relevant. I think it's going to be an ongoing debate for a while. And so that being such a big component of not just the tech sector, which is huge within the stock market, the S&P 500, the finance world, the financials have also got a ton of, lending that they've done over the years to software-based businesses. And so I think that may, in the meantime, continue to be a bit of a headwind for us. But if you get, enough other things here to get things going, we have seen an impressive hold from other industries to keep things relatively elevated in terms of the index level, right? So we'll see how it all plays out. Chris, what do you think about the dollar here right now? Any thoughts on the currency side of things? Are you watching any dollar trades, any currency pairs right now, yen, dollar, whatever?
Yeah, I mean, dollar, again, I would say the lower risk trade is just to be long the dollar. That's kind of going against the grain, which I think in this case is good. It was a crowded trade near the bottoms. I think there's still some upside there. The one thing that I don't love about dollar long is if we expect dollar long to be the play, I still think that is a kind of a neutral to risk off play in equities. And so if we're looking like we're going to tap 7,000 and break through that, I would see the dollar not necessarily catching much of a bid to the upside.
Sure.
Meanwhile, I mean, I saw some questions in the chat for gold and silver. We talked about this last week. I mean, I measured out, if I go to like a 4-hour swing here, I measured out this potential. We had this huge disruptive swing in gold and silver. Here's gold, high to low. If we just went low, high, higher, low, higher, high, I think that's where I'm looking. I'm not shorting gold. I'm just thinking that if we have my 200-day moving average, which still hasn't been hit, let me check and see. We've got to be close to 600 bars now, Nick. Let's check here. We go back to like October 2023. Got to zoom way out here. All right. So way, way, way back here.
Mm-hmm.
Sheesh. Okay. This should be about right. I think, good Lord. So I'm measuring like 610 bars, unless I'm missing something, but I'm pretty sure that's the last time that we tested the 200-day moving average. Yep, that's correct. So that
Been a while.
October, dude, it's over 600 bars. And last time we had that run was 2009, 2011. We did have a similar type move. And I'm not saying that this marks like the top in gold. I just think in the near term, it's going to be tough to get gold to just break out and rip higher. I think that mania is done, at least in the near term. I'd like to see prices kind of settle back in. I think we're, traders and I should say investors are kind of still waiting to see. Well, I guess investors don't give a crap. They're just going to be in long term anyway. Traders like myself, I'm still looking to see, could I get a technical swing? And I still want to see, can we revisit the 4,400 lows? Can we possibly let this 200-day moving average catch up? And I'm just looking at dollar cost averaging levels. Silver, same thing. I was talking to a friend of mine yesterday that's in Chicago, and we were just talking about portfolio mixes. And he's like, well, how much gold do you think I should have in the portfolio? I'm like, I mean, that's subjective, but I mean, I'm looking at maybe taking like a 15 to 20% position, but doing a split between gold and silver. If silver ends up being the outperformer, I'll take a lot of those excess profits and then percentage wise put it back into gold. I think ultimately, we said this a couple weeks ago, it's like all roads point to gold. I think if you want to trade one thing, what's kind of interesting is gold is not just a store value and scarcity, but it's also fear. I think if you want to trade fear and uncertainty and geopolitical risk, gold is that trade. If you want to trade the fiat, I mean the certainty of the government's printing at some point because they can't stop it, they have to. Gold is a good trade. Would I be 100% of gold? Of course not. But I do think having 10, 15, 20% would not be terrible. So just trying to be patient. And the good thing is the excessive run, the parabolic run has kind of at least cooled down where I'm not feeling like an idiot that I wasn't chasing that thing. So now hopefully we do some trading opportunities here in the next maybe 30 to 60 days.
You know what's interesting, Chris, is JP Morgan. I don't know if you saw this, but I've got a chart that I want to show you here. JP Morgan put out a target on gold out to 6,300 going into the end of 2026. And I thought this was interesting because I just mapped it out. What'd you say?
What'd you say the number was?
6,300.
Oh, okay. Yeah, I've seen like 65 to 7,000 projections.
Yeah. So I just mapped it out just to show what that would look like on the chart. So they are projecting that gold is going to continue this run up with relatively similar, I guess this is, I haven't given this enough. Let's just go, like if I were to map this out just visually, that goes to the end of 2026. That's saying something like this. In terms of where gold could go. So maybe you have some upside, some downside, but this is generally where they think. And of course, I say this tongue in cheek because banks, funds, Wall Street, they always have targets on things. And sometimes they're right, sometimes they're very wrong. So it's just a general idea, but the idea of a 6,300 year-end target on gold just goes to show that some of the big money still thinks there is more upside to go on this, and we'll see if it takes place. I think there's a lot of reasons why gold could continue, and not a ton of reasons that I see, Chris, for this thing to have some sort of major correction and stay down. Historically speaking, we've talked about this in the past. What gets gold to have crashes that persist to the downside? Usually it is a painful rate hiking cycle with a Fed that means business, meaning like they're okay with the economy slowdown if it means killing inflation.
Right.
And I just don't know that that's the environment that we're in right now.
Well, Warsh is still like a bit of a wild card. I think he's a bit of a yes man. I think he's a loyalist. I don't think he's a terrible Fed necessarily, but we don't know what the Fed is going to feel like starting May 2026.
Sure.
Right. So that's another potential outlier, is like when Powell is gone and now it's Warsh doing the press conferences. Like, what is that vibe for the Fed? What's the market going to do for that first big FOMC? I do think like little has to change. I mean, if these inflation readings are accurate, there's no reason for the Fed to be aggressively cutting rates. I mean, it does seem like the labor market is stabilized a little bit more. I think we're silly to tell ourselves that, you know, labor is strong. It's like, if you want a job, you can get a job. I think that's pretty much that's probably the positive side of our labor market in the U.S. If you want a job, there's a job. May not be the best job, may not be the career, but I mean, there's gigs, there's side hustles. I mean, there's all sorts of stuff that you can do better than nothing. But as far as the Fed, it's like the Fed is so involved. The government is so involved. It's like the markets, they need that backstop to have like that sense of optimism where we're sitting at these, you know, pretty high valuations, and we still continue to deliver decent earnings expectations. So the compression hasn't happened yet. And you know, having the software stuff, I'll go back to your IGV conversation as well. I mean, I do think that in order to really put a bottom in for the IGV trade, you'd have to see kind of similar like circular trading like we're getting in the semiconductor space, right? It's, you know, this company partners with this company, like basically Mag 7 and hyperscalers are going to be their own utility company in the next probably 24 months or less. I mean, if they're going to be paying for their own energy supply or providing their energy supply, they're going to be not only major tech like hyperscaler capex spending, but also becoming like their own energy source as well. And you know, does that build a bigger moat for them, or does that actually tap into their margins because things are so expensive just to maintain their footprint in this entire like AI build out? Does that make sense?
Yeah.
So if we have like software companies that are like partnering with, maybe that's the lifeline that they need to kind of stop the bleeding right now in the short term.
Yeah, and you know, we'll see how all that plays out. I was also just taking a quick look here on the currency side. Here is our latest short-term fundamental indicator. This is our economic surprise index. So it's looking at all of the major ones that we talk about all the time: NFP, unemployment rate, etc. Right now, you have Euro, CHY, and USD topping the list in terms of short-term momentum, and actually seeing some flip here on the Australian dollar, British pound, JPY getting some of the weaker readings. If we go longer term, this is going to take a look at the absolute differences between GDP growth, unemployment rate, interest rates, and CPI across our major currencies. Dollar continues to have the strongest reading there with GDP growth. Even though GDP growth did come in much lower than expected recently, it still is the strongest of the list, with New Zealand having that second strongest. But you know, growth here. The question is, Chris, if we're seeing, if let's just say, for example, that growth in the United States does actually slow down more meaningfully than expected, where does that take us? And that kind of leads me into like, okay, well, that's going to be more easing from the Federal Reserve. More if you get more, you know, slowdown in terms of economic growth in the U.S. and other places, could be an interesting story. We do have also unemployment rate here in the U.S. 4.3%. It's relatively low compared to peers. If you take a look at interest rates, it is still high relative to peers. CPI at 2.4%, and real yield here still very positive for the U.S. That's why, you know, I've made the case on a longer term basis. I think the U.S. dollar has upside. Of course, there are all sorts of uncertainties that could come along. Last year, we saw a huge tank in the dollar due to uncertainties around trade dynamics. But I've still kind of stayed in the camp, Chris, of thinking if that stuff improves or doesn't meaningfully worsen, which I know we had another flare up recently. But if you get, you know, trade dynamics from here, let's say forward looking, they settle down more, that I think could be an inverse move to what we saw last year. So from a longer term perspective, if there is some stability in U.S. trade that eventually takes place, I do still see that as a more positive thing for dollar, you know, kind of sustainability.
Sure. And well, notice how this whole conversation about currencies this morning had nothing to do with the Japanese yen. Yeah, I have no clue what the Japanese yen wants to do. I am going to take a trade here. I'm going to start to scale in on Aussie CAD short. That long position worked out really, really nicely. Some good old Knoxville divergence on this Aussie CAD daily. And looking left on the chart, you know, if we came back up into this 99, I mean, let's just say parity at 1.00, I'm going to start scaling in small, kind of a current price, and then I'll space this out up into the 1.00 level. So probably do trade 1, maybe a trade 2, trade 3, scale into that. Now, if we start turning right away, even if we just take this last leg higher, If this is 1, 2, 3, 4, 5, like we're probably going to get an ABC correction here that I'm going to try to take advantage of. So I'll start small, scale up to 1,000 or 1.00. I'm going to go after a pretty simple target here. Even a pullback towards about like 9,600 would be fine. So looking for maybe like 100 to 150 pips on a pullback. So anyway, I'll post that for Pulver alerts. I like this trade. Technically, looks pretty good, and kind of one of my favorite efficiency currency pairs, which is we're probably going to pull back into like 90. I said 96 is like a very near term target, but I think in this area here, we pull back to like 93.50 to 94.50 area. That's going to be really where I let this trade go.
It's interesting, Chris, because when you're more of the slow burn Forex trader, these types of currency pairs are amazing, right? Aussie CAD. If you're looking at like Aussie Swiss, if you're looking at Euro Pound, all of those, Aussie New Zealand, like some of those are some really good candidates for longer term mean version type trading, which I know you're into and myself as well in the Forex world. Meanwhile, people who like momentum trading within currencies really hate these currency pairs, right? Because they've got, this tendency to recently you've got a decent strong trend, but look at the monthly chart on Aussie CAD. As you mentioned, efficiency wise, this thing just kind of goes range bound for the last 20 years. So that is something to think about. Is different markets have different personalities. These are commodity currencies, Australian dollar and Canadian dollar. I don't see that as likely to change for the foreseeable future. And so when they get really extreme one direction, there is sometimes that opportunity to go the other way. Of course, RBA has been real hawkish here recently, but we'll see if things are starting to, again, kind of in line with what we just said with the economic surprise index actually showing a little bit of weakness on the Aussie dollar here recently, which is new information. So we'll continue to monitor that. We're out of time here, Chris. We got to throw it over to our next show host. I know you got to move on as well. So thanks very much for coming on to the stream, man.
Of course. I'll see you guys tomorrow.
Okay. See you, Chris.
Bye.
Guys, up next, we've got Miko Aodu here joining into the stream, taking over here for a little bit. Just a reminder, if you guys want to check out the free Telegram channel, we'll leave a link in the live stream chat. You can also scan the QR code that is below my camera if you want to join us in there for daily trade ideas being shared for free, as well as macro commentary on what's happening to keep you up to date from our team here at A1. So the link is in the live stream chat. Stay tuned. Up next, we've got Miko Aodu taking over the stream. Stay tuned. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Okay, what's up, people? Hope everyone is doing good. Good to be back on the stream. As always, guys, bunch of markets to get through. I'll go through roughly what I'm looking at, what I'm focusing on, and of course, if there's any suggestions, any pairs you guys are looking at, feel free to drop it in the chat, and I'll be more than happy to go through them. Of course, let me know timeframes as well. But yeah, we have seen an interesting week. Regarding currencies, I quite like what's going on with some of the yen pairs. Not so much with a lot of the USD pairs. USD pairs have been a little bit back and forth. Some have been quite range bound. On the screen right now, I've got euro dollar on the 4-hour chart, and we haven't really done much for a while. So I don't see much on euro dollar. I did like pound USD, and I still do like pound USD. It just hasn't really set up for an entry. I'm looking for some short-term selling opportunities. We've seen some really nice momentum over the past few weeks. I'm looking to see if we can get another move just back down to support. On the higher time frames, we are kind of still range bound, so I'm not looking to persist in any direction for too long. It's just a more short-term intra-week opportunity, which I am eyeing up. Which all I'm looking for is a push into resistance, and then hopefully if we could see some healthy rejection and push back into support. So in terms of the USD pairs, I do like what's going on with pound USD, but like I said, yen, I do like what I'm seeing, mainly because there's momentum and direction. There's a few that have been pretty bullish. I quite like Swiss yen. Momentum's picked up very nicely, and we have pushed with some real force over the past couple of days, and it looks like we're just seeing the persistence of this daily trend. Now, this daily trend has been pretty consistent, hasn't broken through a previous low roughly since Feb last year. So for a whole year, we've just been seeing consistent higher highs and higher lows. So I'm not looking to disturb that pattern, not looking to try and do anything else here. As long as that stays true, price keeps maintaining those higher highs and higher lows. The only thing that does make sense here is looking to trade in that direction. And since we've seen that 4-hour momentum come into play, I'm looking to see if I can find some entries initially here. So I'm going to be looking for some entries on the lower time frames. If this area doesn't hold, then I'll look for some more entries down here. If that area doesn't hold, then I'll be a bit more not neutral, still be bullish because we haven't validated the bias, but I wouldn't be looking for entries straight away. I'll be waiting for price to maybe find support again and see where we can go from there. But these two areas, definitely areas which I like. This area I'll look to have the first try. We'll see how that goes. If that doesn't play out, I'll look to have a second try down here, and both attempts I'm looking for a push back to resistance. So I like what I'm seeing with Swiss yen. I also like what I'm seeing with pound yen as well. Really nice momentum. This one actually is a bit cleaner, I would say, for instead of Swiss yen. I mean, they're both yen pairs, so really it just depends what the yen's going to do. If the yen's going to be weak, most likely all the yen pairs will start heading in the same direction because of course of their correlation. But with pound yen, I really like the level that price has been interacting with over the past few weeks. Consistent support since late December last year, and we've just been tested that level numerous times. So clearly price is paying a lot of attention to that price. Of course, as of late we did break through, and we spent a few days below, but we have had a pretty convincing recovery of that same level. So all I'm looking at really is this uptrend. I'm looking at this potentially going to be the next higher low. Again, it's just an anticipation. And if that is going to be the case, then I want to see price now stay above this 210 area of support. So essentially what I'm looking at is support. There's your fake out. We've reclaimed the level. Can we hold? If it sticks, then yeah, I'm looking for a push back to resistance. Basically the opposing level of this range, because we have just been pretty flat for a while. So yeah, pound yen I quite like just because of the clarity of the level and where I can place a stop loss, and the risk to reward makes a lot of sense as well. If I can find some entries in that vicinity, a stop loss with a healthy distance below, yeah, that could be 2, 3, maybe even more return on that trade, and that looks really attractive. So if the yen weakness can persist, which at the moment across the board yen pairs are looking like that, I will keep an eye on the yen basket as well. I like to look at the yen basket just to gauge the overall weakness or strength of the yen compared to other currencies. It's kind of a good average. We are fairly close to support, so it's a situation where yes, yen is weak. I'm still expecting more downside, but once we push into support, that's where things can change. Of course, maybe price bounce, maybe consolidate, maybe break through. That'll be an interesting point to see what the yen does afterwards. But in terms of just clarity right now, pound yen, Swiss yen, I quite like the look of. Okay, I'm seeing some requests: euro dollar, pound yen, Swiss yen as well. Yeah, those are the currencies we literally just going through there. If there's a particular time frame, let me know as well. But I'll take a look at euro dollar and pound USD as well. Like I said, I'm not the biggest fan. The pound USD looks a little bit better, so I quite like the shorts there. Euro is kind of like pound, but with just less momentum and less direction. We've been pretty flat since this ginormous up move. Price marginally creating new lows there. There's some bearish slant going on, but nothing which I'll get excited about. And if I expand to the higher time frame, just to see the general direction, we are slowly drifting higher as well. So there's a bit of a contradiction there. We've got a slight drift on the higher time frames with a slight bearish drift in the lower time frame. So it's just no kind of overwhelming opportunity. We're not necessarily trading at a significant area. The direction is not significantly clear. And because we don't have those two components lining up, I'll be very careful jumping into any trades, especially any swing positions, because swing, the whole idea is to kind of gauge direction very well, or at least be positioned well for that. Day trading, scalping, you can get away with not necessarily being positioned particularly well because you're only in there for a short while. So with euro dollar, I don't see much. I'm really just staying back for this, and I'm keeping an eye on the DXY as well, which is just again a good average to see what the USD is doing across different currencies, and this is very, very flat as well. So if the DXY is range bound, stuck between two significant areas, then yeah, that's going to be a big takeaway going to the other USD pairs. I'm not going to be too aggressive with any targets. I'll be a little bit quicker to take my targets, and more so just being aware that I'm in a mean reversion environment. When we were seeing really aggressive momentum previously in 2025, that's a different situation. Here we have to be a bit more conservative until, of course, price decides it wants to break out. So yeah, very kind of short-term opportunities. If you want me to take a look at the lower time frames, I will. Pound USD I do like on the 4 hour. So as I said earlier, this one does look more healthy than euro. Why? Because the trend is more obvious. There's more momentum behind it, and particularly if you can hold into this area, I like the shorts back to the low. If we break above that, I wouldn't be interested in pound, not necessarily because direction is changing, just because we're still seeing larger pullbacks, which implies momentum isn't quite there. The market isn't as bearish as I expected it to be, or as I want it to be anyway. If price does break above that and has deeper pullbacks into highs, well, it means that momentum is not quite there yet. We have to push higher to find some more sellers. That's not really a trend I want to be in, especially when higher time frames aren't necessarily agreeing with the direction as well. The whole idea behind the opportunity is that we're seeing some bearish momentum on pound. Pound has been pretty weak as well. If we're going to maintain that weakness, let's hold resistance and continue. I want that to be pretty swift. If it breaks above, thesis is kind of over. So pound USD, I do like the downside. I'm keeping an eye on that one. Dollar yen, I'm keeping an eye as well. I am just kind of waiting to see what we do at this area, because overall, dollar yen, I think this market is pretty flat. So the area which I want to do business at is pretty clear. It's either 157 or 152, roughly those two levels, and we're of course approaching that level there. So if we do break through, that would be interesting. This becomes the next point of interest back to that high. That could also be a nice place for a short. Now, I would only be looking for a very small opportunity. More so, price gets to the level, reacts well, short-term sell, because yen at the moment is still pretty weak. The trend is still, if you look at the correlation between the yen pairs, we're still seeing predominant weakness on the yen. So I don't want to be holding a position for a while against that predominant force. If I am, it's going to be a short-term trade, and maybe if things go well, I can trail a small amount to continue. Yeah, that's what I'm looking for. Again, that's just not guaranteed. That's just my outlook on pound USD. I'll be waiting for a short opportunity on the 4-hour chart as well. What price is this? 1.357 roughly. It depends how we react there. If we break above it, I would scrap the bias, because at that point the pullback's too meaningful. And it really does come down to the high time frames as well, because let's say, for example, the daily chart was like this. It was just falling out the sky. We're seeing a lot of momentum. Then I don't mind deeper pullbacks on the 4-hour chart. Why? Because high time frames are showing there's an overwhelming force of sellers, taking us lower. So if we do have a slightly deeper pullback, I don't mind that, because I can see clear evidence that selling pressure is still going on. Because pound USD has been pretty flat here. If I'm going to try and find any momentum plays, it has to be shallow pullbacks. It has to, we have to keep that momentum up as long as possible. And if I see signs of it dying, then I'm be very, very quick to hold back, because the conditions are very choppy here. So I can't give it the benefit of the doubt. So pound USD, I like the short-term sales there. Pound's pretty weak too. So, well, generally speaking, we can see if that can continue there. Other USD pairs, I'm kind of being a bit reluctant to trade. New Zealand dollar, that's an interesting one. It's been very bullish over the past few weeks. It's pushing back to highs. So I'm in a awkward situation because I'm not really looking to buy it, especially after such a heavy push like that. And I'm not looking to sell it just yet. We're not quite at the high. So it's a bit of an awkward place for me. Aussie dollar, kind of the same situation as well. We've had a really big move to the upside as well. And this one, I'm not quite ready to start shorting just yet. We are coming to some meaningful areas, but I don't want to be the first person into the market. I want to wait for evidence that we're rolling over. And at the moment, we're still just about creating higher highs and higher lows. So for me, this is still a bullish market. Maybe if you fail at the high here, start breaking through some structure, that could interest me. But we're probably still maybe a couple of weeks away from that actually happening. So yeah, USD pairs I just don't like. And again, it comes back from the DXY, seeing that the average, seeing what we've done for the past 3 weeks on average has just been up and down, up and down. So because of that, I'm not going to be trying to forceful in any direction really. Okay, short-term bias is fine, but let's not get too carried away with that. If the DXY was trending well, and we could see that reflecting on other USD pairs, I know Aussie dollar has been trending well, but that's more to do with Aussie than USD weakness. If that was the case, then I'll be happy to try and push trades, be a bit more active on the USD majors. But at the moment, not quite the case. So I'm being a bit more careful. Yeah, if it retests and rejects well, then I'll be interested. Otherwise, I'm staying put. I'm also keeping a close eye on gold to see how that does develop over the next few days, because we have just broken to the upside. So this is interesting me in terms of, okay, is gold starting to pick up that bull cycle again? You know, has this massive meltdown just been maybe a relief of that exponential momentum we had in 2025? And now slowly but surely we're picking up that momentum, maybe to go and attack the highs again. That could be the case. Now, what's interesting is we just got and broke through resistance. Now we're starting to stall a little bit. So it's a situation where if we go and break highs again, especially with some force, then I'll be quite bullish on gold, looking for break and retest, and more so looking to target the highs again. If we do roll over here or continue to consolidate, then I'm not going to be that bullish. I will still be looking for buys, but I'll be looking for a deeper pullback, more so towards this area, anywhere between 5k and 48.80 roughly. So this would be the area of interest, because if you break through this low, well, the bullish structure is gone again. So this will allow me to get a healthy location for entry. Set some healthy stop losses as well, because I know if I'm stopped out, I'm probably just completely wrong on the idea anyway. And of course, maximize risk reward. Should we push up, I'm positioned well to take advantage of that. So in terms of where I am looking to trade gold at the moment, it is this area. But if we do break higher, then I'm going to be very quick to shift that to focus on some retests. And I'm expecting momentum to start to pick up. And who knows, maybe new all-time highs could be on the board. But I'm not quite convinced just yet. It depends if we break the high well. Yeah. So it depends if momentum picks up, because this was a very, very big aggressive move. And typically after these aggressive moves, if we are going to push back to highs, normally it's quite quick. If price does take its time, multiple things can happen in that situation. So that's why I'm not being so aggressive. And same thing with silver as well. Massive crash not too long ago, and the market's just been pretty flat. So I can't have the bias that, okay, I'm just going to expect price that like nothing happened and just push back to highs. That's not the case. If that was the case, we probably would have recovered very, very quickly, which we haven't done. So I'm not going to be bullish on silver until I see some real strength above this area and some signs of continuation. Then yeah, I'll be happy to find pullbacks, carry that momentum, and maybe start targeting those highs again. If silver rejects this area here well and starts to roll over, it could be the start of a new regime completely in terms of maybe a bigger counter trend move or a bigger pullback, etc. So yeah, being cautious. Gold looks a lot clearer, so that has my focus for now. At the moment, looking for a deeper pullback until I see more signs of momentum's coming into the market, and then I'm happy to keep pushing the trade after that. So gold, not at the moment, but maybe next week there could be opportunities. For now, I'm just trying to stay a bit more patient, a bit more cautious before getting involved. Yes, we can take a look at oil as well. Which one is that? This is gold. This is gold on the 4-hour chart. We can go through oil as well. So oil, yeah, oil's interesting. Last time we spoke about oil on this stream, I believe we were trading around here. Momentum was picking up. I spoke about some buys of support here, but we didn't actually test the support level. Unfortunately, we kind of missed it by a small amount, and price starts flying. So we've had that big move. Price has come back to highs, struggled to continue. Now is looking pretty bearish over the past few hours. So with oil, actually, if I go to the weekly chart, just for some added context, things are still pretty bearish. We've still been sloping to the downside. We've been very consistent with our lower highs, arguably since this high in March 2022. The market has just been consistent with lower highs. So that's predominantly the direction I want to be trading in, especially if I'm looking for a meaningful swing position. Am I going to be looking for shorts straight away? No, not yet. I don't try to be the first one in. I wait for the market to take shape and then try and catch maybe the first or the second pullback afterwards. Because at the end of the day, if this is going to be another lower high, then you would expect to push to support. That's a pretty big move. That's a pretty big distance to cover. I don't need to be the first one here to catch that move. I can be somewhere a little bit further down with a bit more confirmation and still catch a meaningful move. That's kind of how I look to try and take advantage of bigger swing moves. So with oil, I'm getting ready for this. This is my bias. I'm getting ready for this. It's not quite there yet. We could still very much drift a bit higher. There's nothing necessarily saying that we have to fall from here. We can still drift a bit higher. As long as we don't start breaking highs, my bias is this. We could still drift for maybe 2-3 weeks and then drop. So oil's an interesting one. If you're looking at a bit more on the shorter time frame, maybe a trade for next week, I would see what happens here. Reason being, over the past few weeks, very consistent with the higher lows. Now we're coming back into a previous swing low. Let's see how price interacts with this. If it does break through, then yes, that higher time frame bias I just mentioned, the weekly sell opportunity, that becomes imminent. At that point, I'll be looking for pullbacks after. If price does start to form a higher low and start to show some momentum again, then yeah, we could be looking at maybe a final swing or not necessarily final swing, but it could be another swing back to highs. So with oil, it depends on your time horizon. What swing are you looking to try and catch? If you're looking for the here and now, we're definitely coming back into bullish territory. I would be looking at a push higher. If you're waiting on that swing bias from the higher time frame, then we've still got a while to go before jumping into any shorts. So I'll be careful on that particular area, because depending on how we react will kind of maybe dictate where price goes next week. If we hold well, I wouldn't be looking to sell just yet. But yeah, higher time frames, I think everything is still very bearish. So and of course with CAD being very, very weak, it's been interesting what oil has done and then following CAD along as well. I haven't really been looking at many CAD pairs. I've just been focused on USD CAD out of the lot, and that has been quite flat recently. Dollar and CAD have been kind of equal to each other. So my focus with dollar CAD is more so what we do at resistance. If we can hold this, I kind of like the shorts here. Depends how we react, but I like that scope. In terms of an entry, stop loss above, I can probably maximize my risk reward pretty well if that swing was to take place. So dollar CAD, I'll keep an eye, probably again for next week. I'm also keeping a close eye on US 30. Out of the indices, that attracts me the most. Reason being, you still have a pretty clean trend on the daily chart. Still seeing some consistency with the higher lows here between Nasdaq and the S&P. Those are being quite flat, arguably just range bound. We're still seeing a bit of a drift here for US 30, still respecting prior swing lows pretty well. So the plan here for US 30 is quite simple. If we're going to maintain these lows, then I'm expecting a push back to the high. At the moment, we're coming back to a pretty meaningful level of resistance, so I'm quite intrigued to see what we do here. Effectively, the plan is if we do maintain above this level of resistance, well, the trade becomes this, back to highs. And again, potentially higher as well. If we do, if we don't see the breakout and price respects the level, then we could very much roll back over. This could turn into a larger or more persistent range. So I do like where we're trading. I do like how we're trading. It's just that level is becoming an issue because price just seems to can't stay above it. If we can get above it, great. The buys become pretty clear back to that level. So if we take a look at this in the 4-hour chart, I would suggest keep a close eye on 49.7, and particularly if we can break the high there too. If we can break the high whilst we do it, that's fantastic. I'll be looking at pullbacks, longs back to 5,400, 5,500 potentially as well. But yeah, out of the indices, US 30 does take my fancy because it's a very clean level. I can define that very well. I know momentum is still intact in the higher time frames. We're still maintaining prior swing lows. As long as that stays true, the buys become valid. So US 30 I quite like to the upside. Pound USD short term I quite like to the downside. Swiss yen I quite like that to the upside as well. Yeah, that's mainly my watch list as of right now. I'm going to keep an eye on dollar yen. I'll keep an eye on dollar CAD, but they're not quite doing it for me completely. So as long as they kind of slowly chug along, I'll keep an eye on them. Maybe they look different this time next week. But US 30 longs look good. Pound USD shorts, if you can see a slightly bigger retracement, look good. And I quite like what's going on with Swiss yen and pound yen as well. I forgot about that one. And pound yen too. Both looking just to see if we can catch the next move back to the high. So Swiss yen, I'm looking for entries in this area. If it invalidates, I'll look for this area again for the same move. Pound yen, looking for another swing as well, but we must stay above this support level. If price does break through, I will I'll pause that bullish bias for now because it's quite pivotal that we do maintain that support. If we break below, this bullish move doesn't mean much anymore. So need to stay above support. 210, keep an eye on that. Basically the same trade as Swiss yen. You're banking on yen weakness and the continuation of the trend. So I'll be looking to pick one at the moment. Swiss yen, I'll be looking to see if I can get an entry. It's at the level right now. Pound yen might take maybe a couple days to get there, depending on momentum and everything. So that could be a trade for next week if you're interested. So I'll keep an eye on these yen pairs. I think there's opportunity there, particularly if the yen still stays weak. If not, then we'll pivot around. Trading's all about reacting as well. Okay, I'll finish on the Nasdaq because I'm running out of time. So in terms of the Nasdaq, like I said, not a big fan of this. US 30 looks miles better. Reason being, high time frame conditions are a lot clearer. Yes, we had some nice trending conditions previously, but now we're just being very flat. So personally, I'm not looking to do anything in here. I wouldn't want to find an entry, put a stop loss in there. I said last week, this is really where I want to do some business in terms of entries and looking to participate because this just becomes a mean reversion. If price can hold this, I'll be looking for a push higher. If we break through, I wouldn't be looking to sell, but there might be some momentum plays short term there. Here, it's kind of just back and forth. We've seen a very strong day yesterday, but I wouldn't necessarily be banking on continuation. So very, very kind of back and forth with the Nasdaq as well. If anything, some short-term sells make the most sense. But yeah, price action just very, very choppy. I personally would stay away. But yeah, guys, we have come up to the end of my segment. I do appreciate you guys having me on here. If you have found it useful, feel free to check out my channel. I'm pretty sure the team have dropped my YouTube channel in the comment section. Appreciate you guys for having me on. Have a great day. Have a great weekend. And I'll catch you all next week. Take care.
Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Hello, ladies and gentlemen. How are we? How's our weeks going so far? It's Thursday? It is Thursday. Problem with working from home, you lose track of days very easily. So yeah, happy Thursday. Hope everyone has made some money this week. So Life of Life 8398, your question, very interesting. According to the Edge Finder, oil was and still is very bullish, but price keeps falling. As a new user of Edge Finder, how can I deal with that? Well, life. You have found the best possible situation, because what we need to think about is what's the core concept of trading? Well, it's obviously we want to buy low, sell high. Everyone knows that. That is the core idea of what we do as traders. I mean, obviously there is context and things and different strategies, but basically we want to buy low, sell high. So if the Edge Finder is giving something a bullish reading and price is falling, what do we want to do? Well, if the Edge Finder is giving something a bullish reading, it's for a reason. So it could be sentiment driven, it could be economic driven, it could be a mix of the two, it could be seasonality, whatever it may be. There's a reason it's getting that bullish reading. So if price is falling, normally that is a very simple way for us to look to buy low. Now, of course, it's difficult to say where low is because, we're not trading fantasy or hindsight or anything. We're trading real markets. So I was in a position on oil. I'm actually already, I'm in another position. So I bought oil somewhere down here, roughly in this area. And then I was trailed out with a scale in. So I took my exit was around here. So I was looking at this level right here as a sort of area where we could see this break, retest, and continuation. We didn't get that. However, on the bounce here, I did scale in with half of the position size of the original one down here. So oops, that's not what I want to do. Hold on. So both these positions were taken out somewhere within this area, roughly. Now, because oil's still bullish and I'm still happy with the overall trend, this is still a reasonable pullback. Although I didn't see the continuation pattern here with the break and retest, I'm still optimistic. So all I've done is deploy my entry strategy again. So fib from low to high right here. Obviously, we're measuring this extension or this move. So we've got our low, we've got our high, price is in our value zone. And this level almost, oops, that's not what I want to do. This value zone in the fib almost lines up with this sort of area here. So this level of resistance is not perfect. As I say all the time, the markets aren't perfect. It's a little bit ridiculous to use super small lines and all these things to try and measure price movements and areas of interest, because you can't expect millions of, well, actually more, billions to trillions of dollars to flow into markets and just respect buy a single pip. It's just not realistic. So I don't mind entering here. Now, again, very simple. So we've had the pullback after the initial move. We're still in a healthy trend. The value zone here lines up kind of with price over here, previous structure. So I'm looking for a continuation. If we don't get it, fine. However, I've entered with half risk or lower risk than I normally would. So what I would need to see from here is two things. I need to see, actually, I'm not sure why I'm there. H4 here. I need to see this H4 candle close bullish from this fib level. That would then signal to me that buyers are back in the market. This was just a normal, reasonable pullback. So if we can confirm buyers are in with a nice bullish candle close here, then I can enter again with another 0.5 position, and that will round up my risk to what I'm happy with. But then from there, the next sort of problem is this level of resistance. So I would then need to see this break and retest happen. What we could also see here, which is what I'm really don't want to see, is we actually just come up, retest this level, and then continue lower. That's definitely possible. But again, with the Edge Finder reading bullish, the technicals are all lined up. I'm happy to take that risk. So that's the current situation on oil. Original positions are out. Trailing stop was hit for a small profit. So yeah, looking to, well, already back in. So pound NOK, this one, not looking too healthy. It's not too bad. It's not a position I'm necessarily unhappy with, but the price development definitely isn't favorable. I'm not sure where my drawings have gone. That's a bit annoying. But anyway, whatever. So price development's not fantastic. But again, the trend is bearish. The fundamentals are bearish. The UK economy, in my opinion, is not doing too well. So I'm happy to stay in that position. Pound dollar, similar thing. I'm looking for the dollar to continue slightly higher off this trend line here that we've got over the past, what is it, 14, 15, 16 year long trend line. I'm not sure exactly how long it is, but it's quite a well-established level through here. So I'm looking for a bounce. We also had some positive news today for the dollar. So I'm seeing if we can get a continuation to the downside here. Maybe not. Again, it's fine. No problem. And the S&P is really annoying me. I don't know where my drawings have gone here. It seems like they've been taken away. Anyway, it doesn't matter. So yeah, with the S&P, it's not necessarily still as valid as it was. However, the reason I took the S&P short was because we were getting a bearish reading at the time. Then if we look at COT history, I think Nick spoke about this earlier on in the stream when sort of towards the start, but we also had a pretty large amount of selling on the COT reports on the S&P as well. So we saw almost 7% net change, or negative 7% net change if we're rounding up. So that was a nice little confluence. And we also have bearish seasonality on the S&P as well here. So I'm looking for potentially sort of this continuation that we have historically. Whether that happens or not, I'm not really too bothered. It's only $100 on the line. So what I'm kind of looking for technically, or what I would want to see technically here, is these lows get broken. After that, that would allow me to then scale into the position, potentially trail this stop and start building up a larger size. Then we come into the November lows down here. Now, we've spoken about this for many, many times before, but I'm looking for around 6,000 to make it simple, which would line up with this sort of previous high before we had the tariff crash down here. Now, given all of that, the fact that the S&P hasn't moved since sort of November last year, when I say not moved, I mean we're sort of just still stagnant within this range. Makes me think that we could have some sort of explosive move outside of the range at some point. Now, granted, it absolutely could be to the upside. I'm wrong. Fine. Again, it's only $100 on the line. I don't really care. If it's to the downside, fine. I can start building up a shorter position as long positions get unwound, and start capitalizing on that overall idea. Right. Let's see what's going on here. Sluggy, I'm doing well. Thanks. How are you? Gold and silver collapsing. I mean, I wouldn't really say they're collapsing. I think that's a little bit of an overstatement. I would say this potentially, yes, you could count as a bit of a collapse, but this, not really. I mean, it's just a minor pullback on a H4 timeframe. I mean, if we're looking at silver here, we've created a higher high here. Potentially, well, we've created a higher low also here relative to this low over there. Potentially now we're just coming to create a new higher low. What we've also got is moving average crossover here, which just tells us that the bearish sort of trend that we had during this period is now coming to an end, and we could be seeing a bullish trend start to emerge. Overall, I've got absolutely no concern. I suppose if we are being super, super critical, we could be looking at this as a double top. But given the overall factors for silver and gold, actually, I'm very confident that we're going to continue higher. It might not be, you know, a super massive rally. It might not just be a complete correction straight up, but it wouldn't surprise me if it's just this sort of slow grind to the upside, at least back into the previous high on silver. And yeah, basically the same thing for gold as well. So I'm already long gold and silver. So my gold entry was actually really, really nice here. So the fib entry, which is my bread and butter, actually, sorry, it wasn't that one. It was down here. So we take this low, which is, again, it's a little bit discretional, but all technical analysis is. So we take this low to this high. Fib level here between the 50% and the 61.8% lines up really nicely with this previous level of resistance. So I took the long position on this retest right here. So yeah, the position so far is completely fine. So I would expect, now we've cleared out these highs here, that we now basically just do the same thing where we grind higher and just let this market run. I've got no concerns. I don't think there's anything that's necessarily concerning for the metals market. In terms of large corrections to the downside, of course, we might get profit taking throughout the move. We might see some little bit of volatility, pullbacks, etc. But on the larger landscape, I think it's completely fine. Ball out. Hello. How you doing? Tatienda, can you do euro dollar? Yes, I'm actually in some very, very small euro dollar positions here. So what I'm looking to do is just build up a larger position over time on euro dollar. I think the weekly, higher time frame wise, we're a little bit extended. So I'm looking for some sort of correction, maybe just back towards this 200 moving average. After that, I'm not really too bothered. It's more of a mean reversion type trade rather than a macro trade, which is why they're such small positions. However, short term, let's see what the edge finder. I'm fairly sure we're getting a bearish reading on the edge finder as well. We are. So here, euro dollar reading of -8. So that's a bearish reading, which is really, really nice. So the problem really here is that there is nothing to trade from. So we're not really seeing any directional movement. I mean, we've gone from this really clean bullish trend here to pretty much flat. And when I say flat, I'm talking about the moving averages. It's just a way that I use to filter trends. If you would like to know a bit more about my technical strategy and the macro process, I'm sure there will be a link dropped in for a form where you can get a completely free course, free PDF and video as well, where I go through my whole process with the edge finder and going through the trade discovery, trade execution with technicals, risk management, etc., etc. So if you click the link, you can fill in your details and you'll be emailed a completely free full PDF and video course, no strings attached. So with the trend here, with the market here, there is nothing to do. So I would need to see because the edge finder is bearish, I'd need to see the market continue bearish. So we'd need to clear out these lows. We'd need to start printing lower highs, lower lows. We'd need to see the moving averages crossing over as well, indicating then we've got a very solid bearish trend. In terms of bearish targets or short position targets, potentially just the lows down here. We've had a really strong move on euro dollar over sort of from mid 2025 to present. I mean, look at this really strong move. Now, if we also take into account that specifically G7 markets mean revert like crazy, it wouldn't surprise me if we do get a very sort of slow bleed to the downside. Again, of course, that does really require the fundamentals to line up. We need to see more of a hawkish Fed. We maybe need to see the ECB turn a bit more dovish. We need to see that sort of development play out. But that's my idea. Is it wouldn't surprise me if we do see euro dollar slow bleed to the downside. At the moment, I don't really see much of a bullish idea unless we see the Fed start flipping dovish. But again, just using the edge finder, I think short positions are sort of the main go-to play at the moment, but technicals are not allowing it. Now going back up. Yeah, I mean, CME went down last night, didn't it, for metals? So that was interesting. I'm not sure what the full story was yesterday, but was it last night or was it yesterday day period? I'm not sure. But I know we had a bit of a quote unquote technical difficulties, which seemed very, very strange. So hold on, let me see what actually happened. Yeah, so COMEX CME trading halt today was very suspicious. In COMEX February gold contracts, the open interest currently stands at 4,000 contracts. This is highly unusual as contracts open at the start of the month would normally have been delivered or rolled over long ago by now. Therefore, one party still needs to deliver 12 tons of gold against this February contract, equivalent to roughly 2 billion in value at current prices. So yeah, very, very weird. I mean, I'm not saying there's anything fishy going on, but it wouldn't be a shock to me. I mean, if we look at what CME, what's happened previously when trading's been halted or we've had some sort of issues, as far as I'm aware, actually, I don't remember there being any problem when silver was crashing. It was quite large, wasn't it? Was it 30 to 50%? Yeah, 40%. I don't think there was any technical difficulties. As far, again, I could be wrong, but I'm just, from what I remember, I don't remember anything happening during that point. But as soon as we start climbing higher, then we start having problems. Very, very interesting. So there we go. I'll leave it there. Come to your own conclusions. Okay, right. Let's move on. Take a look at Cocoa. You're going to have to tell me what the Cocoa ticker is. I've got absolutely no idea. My exit on oil is beautiful. Fantastic, Sluggy. I'm glad you made money. Well done. Analyze dollar, please. Yeah, we can have a look at the dollar. Yeah, okay. So let's take a look at the dollar then. So I just do not really see much of a bearish case at the moment. And when I say that, I don't mean long term. I'm talking specifically right now. As far as I'm aware, let me just double check this as well, because I don't want to sit here just yapping false information. I just need to make sure that what I'm about to say is still the case. Yeah, so Fed holds rates at 3.5 to 3.75 amid sticky inflation. Markets split on March cut. Powell term ends May with hawkish wash nominee eyed. So hawkish wash. Now, the fundamentals for the dollar are not actually very bad at all. So we can see already here, just above this beautiful 0 bullish reading, the dollar is getting a +6 score. So if we have a look at the dollar here, bear with me. As I always say, please don't email these accounts. I will not reply. They're purely for using for accounts and logging in and things. Anyway, US dollar, yes, bullish score of 6. Now, what we've got is an addition to the net change here on COT. So that's obviously good. If we've got smart money, the big dogs in the markets are adding to long positions or reducing short positions. That's a good check in the box. GDP, not so great. Obviously, the surprise was negative 1.4%. So slight downturn on that one. However, PMIs are doing well. So manufacturing PMIs and services PMIs both hovering above 50. On top of that, we've also beat the forecast quite nicely, especially on the manufacturing here. So that's another nice check in the box. Retail sales, not great at all, actually. Consumer confidence also doing quite well here at 91.2. So overall, we're looking quite good. Now, with PPI coming in, PPI year on year coming in at 3%, PCE coming in at 3% as well, which is obviously slightly higher than forecasted, and the labor market not looking too bad at all. What can we sort of derive from that? Well, we can sort of derive the idea that what can the Fed do? Well, in my opinion, from the way I see it, the Fed can't really look to cut at the moment because inflation is still above target. It's not collapsing. It's not cooling. The jobs market is actually showing some resilience. So as far as and growth as well is quite stable. So in my opinion, the Fed cannot cut rates. And then we also just look at the data itself and we can say, well, the dollar at the moment doesn't really have that much of a bearish idea based on just the hard data. However, I heard recently, or saw recently, that gold has overtaken the dollar as the reserve currency. Not when I say reserve currency, it's in terms of central banks holding more gold than dollars. So that's also something to think about. But just to quickly sort of wrap that up, I guess what I'm trying to say is I am bullish on the dollar, but I'm not going to be heavily buying. I'm not interested in being over leveraged or anything like that. I think we do have a lot on this left side here that could see corrections. So in very liquid markets like euro dollar, pound dollar, major markets, we see these sort of imbalanced moves or these impulsive moves get corrected very frequently. Now, it might take a few minutes, it might take a few days, it might take a few weeks, it might even take a few months, but it is just sort of common price action and market behavior where we see these sort of these sort of candles get corrected. So it wouldn't surprise me if the dollar does come back to around 105 to potentially, let's say 108. And then obviously then we need to sort of reassess what's going on fundamentally. I'm not, again, I want to clarify, not saying that is an absolute, not saying I'm buying dollars heavily. It's just my current loose idea. Look at gold on the 1 minute. It did a weird spike. Looking to see a headline soon. Did it? Yeah, it looks like someone potentially sold a little bit of gold there, but nothing major, nothing that breaks my bullish thesis. Waiting for a better retest on gold, like a weekly down close. Interesting. Fair enough. What moving averages do I use? 200, 150. They're all exponential moving averages. Interesting. My gold entry is exactly like yours. Caught it on Monday though. Very nice. Well done. Where can we go to get stock news release? If you're talking about things like earnings, I would highly suggest getting the stock box. I'm not sure if the stock box has like general news updates though. So you could use something like Financial Juice. That's also a good option. But I'm not a stock guy, so I don't really know. As far as I'm aware, you could just use, I think it's Yahoo Stocks or something. Yahoo Finance, whatever. Yeah, no problems with metals are crashing. Yeah, it's always the way. Good point, James. Big banks trying to cover their naked shorts on silver. Yeah. Can you look at copper? Yeah, we can have a look at copper. I can't trade copper on this broker, unfortunately, but we can definitely take a look. So we were looking at this yesterday. So the idea is basically the same as gold in terms of I wouldn't really want to buy into this level of resistance just yet. I'd need to see this break and retest just to indicate that buyers stepped in, and then obviously the retest is our entry point. Then we could see potentially a continuation. I think fundamentally copper is still a fantastic buy, whether it be current fundamental data we see on the Edge Finder, but also sort of industrial use on copper as well. I think it's just like silver in terms of it does have a very, very solid case to be a long-term accumulation asset. However, as I said, I can't do that on this broker. But what I would be looking for, if you were a bit more aggressive and you didn't want to wait for this break and retest, then you could just be looking for a pullback to these moving averages, then look for the continuation. And then at this point on this retest, you could either scale in or you could trail your stop. But yeah, at the moment, if we are looking objectively without accounting for our bias, the trend, well, sorry, there is no trend. The market just isn't doing anything here. And it hasn't really since the start of this year. Obviously, we had this rally, but then it completely corrected. But overall, there is just no direction here. So I'd need to really see some sort of establishment in terms of direction, and then potentially we could look for something. Any thoughts on the Russell? Let's see. Russell isn't on the Edge Finder, so automatically I don't really have a bias, but we can still take a look at technicals. Russell here. Actually, let me just check macro only. Yeah, so there's still no Russell here. But there is some other things we could take a look at. So, for example, the Nikkei is getting a bearish reading, which is interesting. So, yeah, we'll do the Russell, then we'll move on. So, same thing we discussed with the S&P earlier. There is just nothing happening. It's exactly the same thing as copper as well. The price action is just sideways. Technically, we're still bullish with these moving averages, but in this case, I would need to see this break, retest, and continue. And again, as I've already said, that would just establish the trend. It would show buyers are involved. Then we could start looking for something. But within this range, you can't do anything. Because I'm a trend follower, I have to have a trend to follow. In this case, there is no trend. We could obviously then scale up. We could go to the daily time frame. The argument here is obviously we're in very, very bullish. But on the other hand, we're quite deviated from this 200 moving average. So then my question will be, are we going to see sort of a mean reversion like we saw here, and then a continuation, which is very possible. So even with the daily trend, I'm still very cautious of this range. You can buy copper ETF. What, in IC markets? I don't know if I've got access to ETFs on here. It's just a very limited FX account, but maybe I can do ETFs. I've not actually looked at that. You got stuck in Russell. Unfortunate. Hopefully you got out unscathed. Look at pound New Zealand shorts. Yeah, so I was, let's just see what's going on here. Yeah, there's no short reading. So again, automatically very little interest here, but yeah, I mean, technically it looks okay. I'm just scouting. I've not really checked this market in a little while, so I want to refresh my memory. So I think what I'd want to see here is, yeah, maybe a push back into this level here. And this would just be a previous level of structure. It would allow room for these moving averages to fully cross. We've already had the 50 and the 100 cross, but the 200 hasn't yet. So what could happen is we actually just reestablish a bullish trend here. I don't think that's likely. I do think we can continue lower. Now, I'm not really keen on this entry. I don't think I would be taking this, but if we could see price pull in, reject, and continue lower, that could be an entry signal. And then if we do get these moving averages fully crossing, then we could start looking for scale-ins in the future. But yeah, as I said, there's technically not that much here for me. And the edge finder doesn't have a reading for it. So yeah, there's nothing for me there. If we use the fib, we do have a pretty nice level through here. So that could also be another option. But the problem with this entry is that would require price coming back above the 200 moving average, which then again, as I already said, could be a sign that we're reestablishing a bullish trend. So here is kind of just no trade for me at the moment. Can I bring it up on Edgefinder? Bring what on Edgefinder? Euro dollar. Yeah, we can take a look at euro dollar. Just bear with me. Although we did do euro dollar, so I'll leave that one. Oh, actually, we are at the end. I've got 2 minutes left. Okay, let me speed this up then. Aussie New Zealand. Yes. So Aussie New Zealand, I'm not really seeing anything at all. So although it's very bullish, obviously it's very bullish. We spoke about this yesterday. I'm very worried that we're going to see a mean reversion at some point here. Realistically, I think we could come back up towards 1.21775. This would just correct a little bit more of this left side. It would come and give it a little bit of structure to use as potential resistance. Obviously, that's very rough, but that's a potential target. However, if we do get some sort of flip in fundamentals, I think the retracement back into this range could be quite aggressive, and that's something I really don't want to get stuck in. On the other hand, we also, as far as I'm aware, don't have, do we? Yeah, so the Aussie New Zealand also has fallen off of the edge finder as a bullish reading. So I think, sorry to be the bearer of bad news, but if you were wanting to be a buyer, you've kind of missed it. And, you know, I'm talking in a week, you know, it could be rallying even higher, but the fact it's fallen off the edge finder was still very sort of stretched on higher time frames. We've just broken out of a range. I think the move has already happened. So if you were still bullish or are still bullish, I think really what the play could be is actually just waiting for a retest of this level, mean reversion towards a 200 moving average, then look to be a buyer again on this sort of break and retest. But whether we're going to get that is a different story. Return so far this year, I'm up. Actually, no, sorry. I was up about 17%. However, I got stopped out of a few positions. Although, yeah, I'm at roughly 15, 16%. I think we must exchange. We really trade the same way. Yeah. Yeah, I mean, pound New Zealand looks okay, but yeah, I think it's a little bit premature for my liking. But yeah, there's just nothing on my watch list at the moment. My priority really is just managing and getting out of these open positions. I've managed to do it okay so far. So Aussie, sorry, not Aussie New Zealand, Euro Aussie is kind of the one I'm watching most at the moment because I'm looking to get out of this one actually. But I think there's still some potential room to run lower. So that's kind of the idea. I know that was a little bit contradictory. So what I'm watching now is, can we maintain this downtrend? If not, I'm going to cut the position very, very quickly if we start breaking above the 200 moving average. However, if we start coming down, I'm also not going to hold it for that long. So the Edge Finder does have a bearish reading for Euro Aussie, or it did. Oh, yes, it does here. Bearish reading of -7. So fundamentally, I'm still in line with the trade, but because it's DCA, I'm not going to allow it that much space to just continue to run. So if we can sort of correct back down, I'm happy to close it sort of just around a new lower low from this low. So that's the idea. But yeah, that's kind of it really. So I'm still long silver, long gold. S&P is pulling back, which is nice. I might be able to get out of this one break even. I'm not really that interested in holding this for too much longer. However, if we do end up coming aggressively lower, then fine, I'll hold it. But if we start coming lower, hanging around these moving averages, showing a little buying interest, hovering around, I'm just going to cut the trade because I'm not looking to be in something like this. Of course, again, the risk is small, so I don't really care if it is stopped out. But if I can avoid that, then fine. Pound dollar, again, fundamentally, I'm completely fine with it, but it's not doing too well. Pound NOK, same thing. Fundamentally, I'm completely fine with it, but the development's not that great. And oil seems to have had a nice rejection here, so I'm actually going to look to scale into this one probably in an hour or two. I just want to see how this H4 candle behaves over the next 1 to 2 hours, and then I might add in for another position and just round up the risk a bit. Anyway, ladies and gentlemen, it's time to go. I've ran over my slot by 2 minutes, so guys, don't leave. We have another guest. I'm not 100% sure who it was. I forgot to check. But yeah, guys, have a good one. I'll see you all later. Have a good day. Stay safe and don't get margin called.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello. Welcome to my segment. So before we get started, I want to do something a bit different for today. Go to the comment section and write down your best instrument for the day. It can be a currency, it can be an index, it can be oil, it can be a metal, commodity, whatever you want. So I want you to go in the comment section, type in the best asset that you're looking at for today. And of course, are you looking to buy or sell? So that we have some stuff to put on the charts. Second thing on the agenda for today, we have a giveaway. So if you want to get a free DNA funded account, I'm going to put in the form. So let's just wait a bit more until people comment their best setup for the day. Yeah, so put the best setup and also put buy or sell. It doesn't matter much if you just put the instrument, because we don't know if you're wanting to buy or wanting to sell. Okay, so in the comment section, I have put in the link to the form. It's a JOT form, okay? So check it out, fill out the form, and you will get entered into a DNA funded giveaway, okay? DNA funded giveaway. I'm gonna post it one more time so that you have it. I'll grab all of your names, put them in the wheel of names, and then we will have a random winner. Let me just check which account I have for you today, it is going to be a 10K one-phase account. Yes, 10K one-phase account. All right, I think we can get things started. So let me tell you my watch list. Just as a refresher, I have the Nikkei, which is the Japanese stock market. Current position running at around 3.7, 3.8% profit. Stop loss is at 55821. I'm looking to trail the stop loss. I'll probably do it tomorrow. I kind of want to bank some profit. I don't really want to see the price go back to this level and take me out. That would be leaving a lot of profits on the table. So maybe moving it just under 5.7. Yeah, moving it just under 5.7K seems like a good option. So I have the Nikkei position. I'm trailing it. This was a signal in the A1 Discord. So if you do want to join the A1 Discord and get all of my signals, you can check the link in the description, and you can use the code Marco to get 25% off. Okay, check it out. Second thing I have, gold position. This was not a signal because this is more of an aggressive position. I took this on my prop firm accounts. I usually reserve the best stuff, the stuff that I actually take on the personal account. I put that as a signal. But I'm also in gold, took a small position on Friday last week. Stop is now at break even. I'm looking to get in on my personal account as well if we go back to the 20 EMA. So looking at gold. On the Edge Finder, it is a neutral reading at the moment. So we're getting a neutral reading on gold. I want to see a pullback to that 20 EMA, and I want to see a bullish reading on the Edge Finder. Then I'll take another position on the personal account and maybe add in to my prop accounts as well. Main thing with the prop accounts, be as aggressive as you can while respecting your plan, while respecting your edge, and take as many setups as you can, okay? Because the more setups you take, the quicker you will pass the challenge, the quicker you'll get to a payout. You don't want to prolong your challenge to last for 12 months. Trust me, I've been there. It's not a fun experience. So you need to be more aggressive, but you need to have an edge as well. The thing that I do is in the A1 Discord, you get signals from Trader Nick, Iwind, Chris Pulver, Alan as well. Alan posts an analysis here or there, and he comes onto these streams, shows us his positions. So sometimes I follow the A1 trading guys on my prop accounts. Again, I know there's an edge. I just want to take as many trades as I can, let the edge play out over a large sample size. Then we have the Aussie dollar. I want to buy the Aussie dollar. Yesterday, nice move higher. We had the inflation print in Australia. I want to see a pullback to 695. That's what I'm personally watching for. Will I get it? I don't know. We'll have to see. Pound Aussie. I want to sell the Pound Aussie. I'm looking at the 20 EMA. I'm looking for a pullback to the 20 EMA. You may look at this chart and say it's overextended. It's oversold. I would say there's still a bit of room to play. I would say the first major area of support, yes, is here. But if we pull back, you can get an entry at around 1.927. You know, then maybe you can have your first take profit at 1.894. That's an option. That's about it for the watch list for today. I know a lot of you are looking at oil. Personally, I'm staying away from oil. I think the current situation in the US and Iran is so unpredictable that I just don't know what's going to happen to the oil price. I know the Edge Finder is giving a very bullish reading, but personally, I don't have a lot of experience in trading oil, so I tend to stay away. US stock market retracing on the day. The Nasdaq going lower as well. Interesting, because yesterday we had a pretty bullish candle. Yesterday was pretty nice. Interesting to see. Now, let me see what you guys are watching. So, hello, Sluggy. Hello, Max. Max is watching gold. Sluggy, GPNZD, Elafi, hello. GPUSD, GPJPY, the Nikkei. GJ Short, GPUSD sell. So you guys are really looking at the pound, British pound. Interesting. As far as the British pound goes, not a bad thing to sell. I think even the Edge Finder has a bearish. Okay, now it's neutral, but it used to be bearish, right? Let me double check GBP USD. Yeah, yesterday it was bearish, and on Monday bearish as well. Okay. This is not really a massive downtrend. This is not really a downtrend at all. Maybe like on the 1 hour chart. No, not really. But we are below the 20 MA, and the worst or the weakest currency for 2026, in my personal opinion and my personal forecast, is the British pound. So the weakest currency. Dollar is starting to catch a bid. If you look at the DXY, I think we found the short-term support. Right there, some short-term support. So I like it. I like the selling of pound USD. If we get a sell setup on the top setups, if we get a bearish reading, I'll definitely consider doing something on pound dollar. I know also Alan, I think he's playing euro dollar short and he's playing pound dollar short. The Bank of England is looking to cut interest rates, which I can show you right here. Bank of England, next meeting pricing, 76% chance of a rate cut. And the curve is down, meaning they're looking to cut for 2026. Okay, I like this chart. See, this is why this is good. You guys give me more ideas. I maybe give you some feedback, and we all work together. Actually, in the A1 Discord, I've seen quite a few times a really good trade idea, and sometimes I even executed that same trade idea. So it's really good to be surrounded with traders, to have a community of people and traders that are looking at similar things, looking at the Edge Finder, fundamentals, breaking news, macro situation, because we can bounce ideas off of each other. So that's why this is so great. And that's why in prop firms, there's like 10 or 15 traders on the same trading floor, because they all help each other. They're basically there to help each other, and they're a team. So it's not like individual trading, they're actually trading as a team. You're much more powerful, you're much stronger trading as a team compared to being a lone wolf in the markets. Being a lone wolf works if your IQ is like 200, but if it's not 200, then it's gonna be tough. Let me post the link to the giveaway form once again. So a reminder, if you wanna participate in the DNA funded giveaway, it's a 10K one-phase account. Fill out the form, and all of your names will be put in the wheel of names. See here, and then we're gonna spin. So gold, GPUSD, GPNZD, oil, Aussie yen, euro dollar. Yeah, I know a lot of you are looking at oil. I have noticed that, and that is because there is a very bullish reading on the Edge Finder, and there's a definite uptrend on the daily chart. Let me tell you what's going to happen, or let me tell you the scenarios. First scenario, US attacks Iran. Oil prices go up. Where? I would say to 70. I would say 70 is a good target. Second scenario, the Iran and the US tensions go down. Oil prices go down. Where? Maybe 62, 61, 60. You know, at the beginning when this whole conflict or escalation started, we can go back to the initial levels. And that's why I say that personally, I have a hard time finding an edge here, because it's so 50-50. The US can attack Iran, or there can be a deal. It's 50-50. No one knows what's going to happen. Not even Trump knows what's going to happen. He just has scenarios. If they make a deal, we'll leave. If they don't make a deal, we'll attack. You know? Euro dollar short, okay, that's a similar idea to pound Aussie short. I like it. Aussie yen, hello cycling club. Euro Aussie, UJ, good buy right now. Personally, I would not look to buy USD JPY at the moment. I still think the yen is going to catch a bid overall. Like in 2026, I still think the yen could catch a bid. I still do believe that rate hikes are coming. If you look at the pricing for the Bank of Japan, by the end of 2026, the rate is going to go from 0.75 to 1.24. The curve is clearly to the upside, so they're looking to hike interest rates. Should be at least a little bit bullish for the yen. I also know that the 159 or 160 level is going to get heavily defended. At least that's what we've seen as evidence. You know, look at this massive sell-off. Look at this sell-off as well. So would I play along? Would I play along into 160 level? Personally, it's not for me. Nikkei and the UK 100, okay, that is good. I think that goes well with diversifying out of the S&P or new money going into the Nikkei, into the UK, into Japan, into Brazil, Peru, Europe, instead of the S&P. What is the DAX doing? Struggling. Oz Yen. Cycling Club says, Marco, I've been in the same trade as you on the Nikkei, but I participated as 3 separate long trades. Interesting approach. That's pretty nice. So hopefully you caught a nice profit. Hopefully you made some nice profits. Yeah, I mean, the price action looks fine. You know, it's just respecting the 20 MA. It looks really good. Looks really healthy. Pretty happy with this position. If I can move it just underneath 5.7, could be nice, or should be nice. So time for the giveaway. Let me grab all of the names. So if we go, today is the 26th. 26. Okay. Let's see. Let's copy. Go to the wheel. Paste, spin. Let's see. Yesterday, there was quite a lot of people submitting their names. Today, we still have quite a lot of people. Shahab, so congrats on being the winner. After my segment, after I finish this live stream, I will send you an email. I have your information, so I'll send you an email with the code to the 10K One Phase DNA account. Congrats, and if you want to identify yourself in the comments, please go ahead and do so. If you're looking to get funded, if you didn't, did a trade just get closed? Let me see. Closed positions, just a second. Yeah, I did. Anyway, if you're looking to get funded and you didn't win the giveaway, make sure to check out DNA Funded. So this is my personal 25K two-phase account. I'm currently up 4.1%. And with the code A1Live, you can get 25% off any DNA funded account. Okay, so any DNA funded account, A1Live, 25% off. I highly recommend you check it out. So currently I have open a sell on your GBP, a sell on gold, and I had a position open on the S&P, which got closed recently. The profit target is here 2.5K, and I'm up 1.1K. So we'll see what happens. Anyway, great firm, big broker behind it. This is not one of the prop firms that will disappear in 3 months alongside with your initial deposit, or not deposit, but your initial payment for the challenge. And with the code A1Live, you get a really, really good price as well. Really competitive price when you compare it to other big dogs such as FTMO, 5%ers, E8 markets. So once again, A1Live, 25% off. Check it out. I've had a great experience trading with them so far. Okay, back to the comments. USA Tech, big dump. Big dump on USA Tech. Ooh, yeah. It is a big dump. Damn. So, any news for this? I'm not seeing anything. Of course, you can always check out Financial Juice. You can go to equities, I don't see anything. Yeah, looks like it's just some selling on the markets. We had earnings yesterday for Nvidia. I think that the beat was massive, or it was a pretty big beat. Okay, so that was bullish. But now we have the US 100 or the NAS 100 just massively dumping. What about the S&P? Whoa, S&P dumping as well. So it's not isolated only to the Nasdaq. It's also in the Nikkei. So the Nikkei is dumping as well. What about the DAX? Same thing. Russell, Dow, gold, not moving higher, which means this is really not a risk-off scenario. Looks like it's just a dump. Bitcoin, yeah, Bitcoin dumping as well. Okay, let's do the daily chart. Risk off, risk off, risk off, but not benefiting gold at the moment. So usually what you would have is my Nikkei position would fall and my gold position would go higher, right? That's what you would usually get, because as markets go into risk off, usually there's some sort of uncertainty. There's some sort of a scare in the markets. So that happens. Oh yeah, VIX, damn. So VIX is flying. VIX is the volatility of the S&P 500 options market, I believe. If VIX goes up, if VIX explodes, the stock market drops like a rock. So there's the correlation is VIX goes up, stock market goes down. Volatility goes up, stock market falls. VIX really high. Yeah, I mean not high, but a big explosion. What is the most interesting is that I don't see a catalyst. So I'm not seeing a massive catalyst at the moment. The last big sort of catalyst we had was yesterday from the Nvidia earnings. Okay, the only thing I'm thinking of right now is possibly trailing the stop loss a bit higher on the Nikkei. If this is a real dump, if this is a real risk-off event, this thing can just fly through the 20 MA, fly through the current stop loss. So maybe moving the stop loss a bit higher up to that 5.7 level may be smart. I'm going to have to think about it, and then we shall see. Okay, let's check out some individual stocks. You know what's been the narrative lately? The narrative lately has been sell software. So if you look at Meta, I mean, Meta is really not software, but it's it has been selling. Palantir. Okay, what about Google? This is just the top technology companies. Google selling off even more following the NAS. What about Nvidia? Okay, just in a range. Nvidia is super boring at the moment. If you zoom out, it is flat. It is in a range. Microsoft, MSFT. Yeah, following that 20 MA, but to the downside. So tech getting sold off quite aggressively. Look at the yen. Let's take a look at the yen. The yen. Well, should I go to Euro yen maybe? Okay, big dump on the 5-minute. What about UJ? Okay, not really dumping as much as EJ. Let's take a look. Daily. I actually had a position on Euro yen right there. Got taken out of it. And I got taken out because we had the news with the Japanese Prime Minister Takaishi. She mentioned that she has reservations about a further rate hike. And if you know something, what you should know about Japan is the government pretty much controls the Bank of Japan. The government pretty much controls the central bank. It's a bit different than the US with the Fed. The Fed is supposed to be a whole separate entity, but in Japan, they kind of work with each other to do what the government wants. But maybe you guys are right. Maybe you guys are right about the yen. So Max says current strength website. Let's take a look. Yeah, okay. Money going into the yen. Absolutely. Let me see where I left off. MSFT buy look way better. Teamwork makes the dream work. Absolutely. Does DNA support MT5? No, it's TradeLocker. So DNA is only TradeLocker, but to be honest, TradeLocker has been the best software that I used. So as far as trade execution goes, DNA funded by far the best. TradeLocker by far the best, because with MetaTrader you don't have a position size calculator built in. You have to do all of the calculations manually. But in TradeLocker, it's all done automatically. Okay, so that's a bit better. Oil down 2%, then up 2%. Probably will swing even more when Geneva, Iran, US talks continue. Yep. Don't get trapped in oil when the falling knife pattern forms. Okay, then we had the Shahab says I won, so congratulations again, and you can expect an email from me after my segment. VIX is up 12%. UK 100 showing strength again and holding firm. Let's see, let's take a look. Holding firm in this sell-off. Is that right? Actually, you may be correct. It is holding firm. Interesting to see that. And it looks pretty healthy. Wow, it looks really good. Let's do a quick comparison from the beginning of 2025. Let's click the plus button. Put the S&P. Yeah. What about if we put on the Nikkei? Okay, Nikkei is the absolute winner. But the UK 100 is not bad either. The price action is nice. Really, really nice. We have touched the 20 MA here. What about the edge finder? If we go to UK 100, bullish reading. Okay, awesome. Awesome to see that. If we pull back to the 20 MA, it might be a good position. Sluggy says, Marco, look at GBP NZD. GBP NZD. I mean, if you want to sell it, I would rather do pound Aussie. I don't think the New Zealand dollar is so strong at this moment. I would rather focus on the pound Aussie. I think pound Aussie is a bit better. So let's do a quick check here. GBP NZD. Neutral. What about the pound Aussie? Neutral as well. Okay, fine. Yeah, personally, I don't like GBP NZD because I think there's a better play. If you want to do something with the pound, better play would probably be selling pound Aussie, selling pound dollar. My short of euro and GBP versus dollar looking good. Thanks for the site. TradeLocker, if they fix the lag, it's goated. Yeah, I'm a swing trader. I trade mostly on the daily chart, so a lag, any sort of a lag is not really going to be noticeable for me personally. Gold has now sold off as well. That's interesting. Definitely has started to sell off a bit. So we're definitely getting a pretty big sell-off, or it's not that big, but definitely some sort of a reaction, which is weird. So we're going to get more clarity on this. Could be with the yen. Most likely it's connected with the yen because the yen seems to be outperforming most other currencies. That's the game for today. And that is also the end of my segment. So I just want to remind you, if you want to get the Edge Finder or you want to get into the A1 Trading Discord, get all of my positions, this Nikkei one has been a really, really good position. I'm really happy with it. So if you want to get all of those, definitely click the link in the description and use the code Marco to get 25% off. Thank you very much for watching. Don't go anywhere because Tiger is coming on right after me. And I will see you tomorrow. Goodbye. Okay, let's just wait for James to switch off to the next guest. Just a second. Okay, so 1 second. Let me see if I can do it. Okay. Hello, Tiger. Can you hear me?
What's going on?
Hello. So unfortunately, I'm not so proficient in changing things in StreamYard, but until James comes on, we can do some sort of a play. Let me see if we can do this. Okay, and now you're hidden.
Yeah.
Let me try to remove myself, and then I think everything will be fine. So
Okay.
yeah, good luck with the stream, and I'll try to remove myself from the stage. Goodbye.
Sounds good. Bye. All right. See if I get my face on there. All right, there we are good to go. So let me reshare. Oh, I'm still shared. Well, what's going on, everybody? Happy Thursday. I have my financial juice page pulled up because I'm assuming this is probably why everything's going a little bit on the loco side, a little crazy right now. Trump and the President Xi summit preparations falter. That's that red item that you see there. Falter. Their preparations faltered as planning gaps unsettled. Oh, there we go. So is that why everything's fluttering around right now? Is that why we've got a little bit of chaos in the market? Probably, possibly, guys. I mean, we don't really have anything else at the moment other than FOMC Bowman, Michelle Bowman. I think that's Michelle Bowman is her name, flapping her lips. Okay, she's been flapping for about a half an hour, so I don't know that would be anything causing this. So it's probably going to be that. Just one simple little planning gap, guys, and that's why the VIX is going crazy. The dollar's up. All the other currency indices are down at this point. So we'll continue to monitor that, see if we get something more than just that simple thing that without a link, right? That simple statement. So, but yeah, just to kind of go take a look at the indices I was looking at before I got on. Obviously, like Marco was saying, VIX is just going crazy at the moment. The Dixie itself is going up, and then it looks like all the other indices are going down. So there's Australia, there's British pound, there's Canada, Eurozone, the Jexy, which isn't as crazy, and then your Swiss is a little bit down, and then your New Zealand. So that's your 8 major currencies right there. But yeah, dollar's benefiting by it, and I kind of like it, whatever the hell it is, because I've got a euro dollar short position on. I know I saw one or two of you, others of you in the chat earlier mentioning euro dollar short when Mirko was asking your favorite asset. So that just so happened to be the first trade I got into earlier this morning, euro dollar. And then I'm also in another one, the Swiss yen. So it's going to be interesting to see how this, this falter, as they put it, affects our instruments. But so far, it's not doing so well on Swiss yen, but my euro dollar is actually doing okay. If I just flip on over here, this is my GUI trades, guys. This is one of my challenge accounts. And just starting with the euro dollar, this is one where I was looking at a 4-hour supply zone, taking a look at these two basing candles, the last candle before this big expanded range candle out. Just so happened to be a nice indecision candle, guys. So really nice basing consolidation type structure, followed by a strong gap out. I mean, a strong drop. Supply heavily exceeded demand. That's obvious because we had an expanded range candle to the downside. So with euro dollar, we do have a -8 score over here on the good old trusty edge finder. And so when price came into this supply zone this morning, I waited for this 1 hour time frame candle to close bearish, because as of this swing low, okay, we were in an upwards momentum. Clearly, I mean, you guys could see that. Anybody could see that from a mile away. So upwards momentum. So all I wanted to see when price bounced into that supply zone was at least a momentum candle going to the opposite side. Not saying it's going to turn around, but at least that's like half of it, right? Okay, great. We've got a bearish candle. It's also pretty much engulfing the candle to the left of it, right? So strong push up. Seller stepped in and rejected it and pushed price deeper. So that was my entry, guys. It wasn't on this candle, and it really wasn't even on this candle because I was busy doing some other items. Oh, yeah, called sleeping, right? Oh, wait, I'm sorry. Hold on. What time frame was that? Well, nevertheless, it was when I first woke up. So anyway, I ended up selling on this candle here, this green candle. Now, when I got into it, we had some bearish pressure. So the candle was, a little bit lower than what it is now. It's kind of hard to see. But anyway, yeah, all the signs pointed to shorting this asset. If I go look over here on euro dollar on trading view and I look at my moving averages, just starting from the top, guys, the dark red is a little bit below the light red. So that's my 8 EMA below my 21 EMA as a mechanical way to confirm trend. So that's good. And then obviously edge finder -8. Then from there, I dropped down to the 4 hour. And that's where, again, I found my supply zone. Okay, supply zone there. And then when I drop to the 1 hour, I want to make sure my 50 EMA is below my 200 EMA. So that's a good thing. That's a check. Price pierces the 200 EMA. Check. Okay. A lot of people that use 200s will start shorting in here. But for me, I want to wait for the unfilled orders. Okay. So ended up shorting up here. Again, after we showed at least halfway that we're trying to swing back down to the downside, changing the momentum, right? So change the momentum and then look for that break of structure to the downside. So that's the short position. Got a nice drop. We had a little bit of a retracement, but then, yeah, all of a sudden, okay, we start getting this headline from just a short while ago. And then ever since then, it's just been crazy. Okay, there's your 5-minute chart on euro dollar. So really strongly in my favor. I mean, who knows, guys? You guys know how these things act. It could very well retrace this whole bit of unrealized gains, but we'll just keep an eye on it. There's nothing else that I want to do on this except just trust it, let it do its thing. I do have a stop loss above the structure, okay, above the 4 hour supply. And then I put a take profit, just kind of a tentative take profit for down here at this support level that it kind of formed. And more specifically, be on this, or actually, I guess it'd be easier to see over here on the trading view, but looking at this little 10-minute demand zone, guys. So this is really where I want to have caution. Okay, it may not look like much, but we had a sharp drop, we had a basing, and then we had a strong push out with fair value gaps galore, pretty decent volume spread analysis activity as well. And so, yeah, you guys see I've got my kind of an eyeball line right in front of it. In fact, I'm going to put an alert down here just so I can see how price is if and when it comes down there. I want to see how it reacts. I want to see how it reacts to that demand zone, because if it doesn't react too strongly, well, maybe I'll be okay with using the support line I drew up where I ultimately put my take profit and just stick with that. So it really just kind of all depends on how it reacts once it gets down there. And I'll just throw this out through the end of the week, end of tomorrow, since it is Thursday today. We got another 30 hour, or what's my math? About 28, 30 hours left of trading for the week before the session closes. So Anyway, that is euro dollar. And as always, guys, let me know if you have anything you'd like me to bump to the front of the line. I've had like 6 alerts hit ever since that summit note came out. So I've got plenty to go through. So I'll go through those, but let me know if you want me to bump anything up. And then as far as Swiss yen, guys, this is a trade I got in just before that news piece came out on Financial Juice and everywhere else. But Swiss yen, just as a refresher, it's given us a +5 bullish score over here. If I take a look, let me see. If I look at my 1 hour chart, or no, actually, I was looking at this on a 15-minute. That's right. So this one's more of a 15-minute. Oh, wait, I'm sorry. I'm on the wrong one. Swiss yen, Tiger. Go to Swiss yen. Swiss yen. There we go. There we go. Now it looks right. I was sitting there thinking it doesn't look right. Anyway, 1 hour, guys. I'm sorry, daily. Let me start from the top. Okay, from a daily, we got our 8 EMA above the 21. So check. Okay, confirming bullish strength. Go down to the 1 hour. I've got my 50 EMA above my 200. Check. And then from this one, I actually got in from a 15-minute time frame. So on a 15-minute time frame, now this is more of the scalp type trade, guys. Okay, 15-minute time frame, I still have my 50 remaining above the 200. So that's a good thing. We pierce the 200. We drop into demand over here. Now, I'll be honest with you, I missed the trade initially because I was in the middle of an interview. Hey, got a financial analyst, content creator role that I'm trying to get. So wish me luck. Cross your fingers for me. I think I have a second interview coming up. But anyway, during that time, what had happened was on a 1 hour chart, because remember, I want to get, it's temporarily in a downtrend right here, right? Just a little bit of bearish momentum. So I have to see that it's at least trying to poke back the other way. The demand zone, yes, that's where the unfilled orders are, but I want to see a 1 hour close. And that's what I got right here at this 6 a.m. candle. Got a close there. And then obviously the goal is buy the breakout above. Well, I missed it, but what happened is it kind of gave me a second chance. It retraced. Okay, so it retraced. It retraced back down into that initial 1 hour demand. So this is where I ended up getting into the trade. And actually a little bit better of a price, because obviously this right here would have normally been an entry right here. But if I go over here to my GUI trades, I just like saying GUI trades. GUI. Over here, I ended up getting into the trade here, guys. Okay. So again, currently it kind of dumped a little bit with the news of that summit delay or postponement or whatever you want to call it. But I got a better price ultimately, so I'm happy with that. And then as far as take profit and stop loss and all that, I got my stop loss below the structures down here, below the demand zone. Just make sure everything's good. Okay, I was just making sure YouTube was still working. So yeah, stop loss down here, take profit at the top. Okay, top of the structure. Now, I want to be aware of this zone right here. So if I drop into a 15, and then I'll check out your chat question here in a second. I want to be aware of the supply zone right here. So really the way I'm looking to play this, guys, ultimately I'd like to take profit at the top of the structure, the origin of the overall strong move down, but that is a clear as day supply zone I have to be aware of. We had 3 basing candles. So we had a leg in candle. That's this green candle. And then we had 1, 2, 3 basing candles before obviously a big strong drop. That had what did it have? Had a gap. There's our fair value gap right there. Okay, that tells me supply heavily exceeded demand and left the inefficiency in the market. So that's our gap. What do banks like to do? Close gaps, look for unfilled orders on the other side, potentially take price the other way. Right? Now it's an uptrend. It's an uptrend on EdgeFinder as well. So I'm going to stick with it. And that's why I put an initial take profit up here. But once we get up here, what I'm probably going to do is just bring my stop loss potentially just to break even. Okay. Just in case it does catch orders and take away all my unrealized gains. That's if it, that's as long as it turns around. So that's kind of my game plan right now on the 2 trades I've got. And then as far as the chat goes, oil chewed me up and spat me back out. Chris, I hear you, brother. It happens, man. Sometimes, look, we got our red folder events. We've got our, Forex Factory or whatever other economic calendars we look at. But look, things like this, these are just unknowns. That's geopolitics for you. So it's nothing necessarily that you did wrong. I mean, just like for me, guys, with this Swiss yen or the euro dollar for that matter, in a way, I kind of look at it this way. Obviously everything pointed to sell this asset, but it's partially, I think, probably being aided by the unknown at the moment, right? So you call it luck, you can call it skill. I wouldn't call it skill. I just call it luck at the moment. I mean, all things being equal, obviously my analysis points to short that asset. Talking about the euro dollar, okay? But how much of that's being aided by something unknown like this? Markets hate the unknown, as evidenced by the VIX. Okay, that's called unknown. That's called something ain't right. Something's changing. Okay, we all fear change, right? There's something changing, so that's the market's freaking out about it. Daniel says, what indicator is that you are using to check the EMA? Just a simple moving average ribbon. I mean, if I go back to trading view right here, the cool thing is, let me just go to a 1 hour here on the VIX, just as an example. Okay, it's just the moving average ribbon, MA ribbon. You can just type that in your indicators. And one thing that's really cool, guys, if you don't know this when it comes to moving averages, well, number one, I like the moving average ribbon because I can put 4 different moving averages on there. But the cool thing is you can actually tell it, hey, I only want, like I've got 4 moving averages, right? So I've got a 50, oh, you know what? That's not even the right one. I need to turn on the correct one. Oh, that's right. 50, 200, 100. My numbers got off somehow. 50, 200. Yeah, let's do this 1 hour daily. Let me just go look at something here. Yeah, here we go. This is right. So 8 and 21 being my higher time frame. Okay, I only want that to show on the daily or higher chart. So you can actually go over here to visibility and turn off whatever you don't want that moving average to appear on. And then you can just open, and that way that way it's not confusing you, because otherwise I'll have 4 lines on here. Okay. I only care about the moving averages depending on the time frame I'm in. So for me, daily or higher, that's where I only want to see the 8 and the 21. Okay, but then you can go and create a second moving average, or put on a new one that only shows you the moving averages that you want to see on that particular time frame. Okay, 5,200. Okay, so I didn't know if you guys knew that or not, but it's kind of cool how you can tell it only show me that specific indicator in that specific time frame. So in this case, I wanted to ignore the daily or higher. Okay, but yeah, moving average ribbon. You just go up here and just type in MA ribbon, and you'll find it. Hope that answered your question there. Aussie yen and dollar yen, asks Elvis. Go take a look. Aussie yen bullish 6, dollar yen. I was gonna say I knew it was up there. So yeah, they're both looking great from a edge finder point of view, meaning fundamentals, sentiment, combination of that. They move an average crossover seasonality on the technical side. It's looking good. So let's go look at them. Okay, dollar yen. Dollar yen. Okay. 8 is above 21 moving average. That's good. That's in line with edge finder. As far as the daily 4-hour confluence, we would be looking at this as a daily demand zone, this red candle here, because we had a gap above it. So let's go see if we have a 4-hour inside of it, and that's going to be this area. So yeah, it's basically going to be that. So if I'm just looking at the technicals, that would be my daily. And if I drop down to 4-hour, this would be my 4-hour right here, this green candle, as far as an entry goes. Okay. So this right here. Now you see another one. It's because I'm looking at some smaller time frame stuff. But if I'm just looking at my favorite confluence, that's it right there. Now I'm looking a little higher up. So let's drop down and see what it is I'm looking at. Right here. So if I go to a 1 hour, you see we've got a really strong gap here. Would you guys agree that's a hell of a gap? Pretty strong gap. Meaning demand heavily exceeded supply. So strong that it left a giant gap that's way bigger than even the consolidation beforehand, the zone beforehand. So there's our gap. Okay. So it's an inefficiency in the market. Remember, banks, institutions, they like inefficiencies because they know that there's typically liquidity on the other sides of them where that demand heavily exceeded supply or vice versa. So on a 1 hour time frame, I'm looking at that. Now, a 1 hour time frame, if I go this option, everything's looking good because I've got my 50 above my 200. Okay. I would want price to pierce the 200 at some point, but I would want the 50 to stay above the 200. Okay. Remember, that's my rules. I don't want to adjust. I don't want to. What we don't want to do is force our will. What we want to do is tell the market what we want. So the market, for me, and the market's going to do what the market's going to do, guys. Stop asking the question, what's the market doing? And start asking, what am I supposed to do here? Right? Kind of a good rule of thumb. So as long as it meets my rules, then I'll get into this trade. Now, obviously, I want the RSI to drop below 20, showing that heavily oversold parameter. And then, when price bounces into the 1 hour here, the 1 hour demand zone, as long as it meets all my rules, I'll take that 1 hour bounce, as long as I get a bullish close. Okay? Kind of a curl around. So drop in. Maybe we get a 1 hour candle, something like this. And then I would want to buy the breakout of that. Right about there. Okay, the next candle. Because sometimes what'll save you on this kind of stuff, sometimes even if you get that bullish candle, often what happens, a lot of times what happens is, once we get to that point right there, price will just completely reverse like that and just go on and stop you out. So if you wait for the actual breakout, that'll keep you in a lot more trades and keep you out of a lot more losses. So again, it's confirmation entries, bullish engulfing candle, have a candle with a wick on the bottom side of it, have a inside bar, or just the good old fashioned drop in, bounce out, break this structure here. Okay. Like this, because this creates a brand new impulse. This creates a brand new impulse move when we break that structure right there. Now, this is just an example. Okay. So that's our new impulse leg on a smaller time frame. So right here, we just wait for another discount back to demand zone, small time frame demand zone, or maybe a 61.8 fit level for that actual spot to execute the trade, right? That's your break. That's your confirmation entry, 101, break structure. Remember, this turns into the impulse leg. We know that because it broke a structure. And then usually you'll get a brand new created demand zone somewhere in that area. If you don't see a demand and you really want to get in that trade, whip out your fibs, swing low to swing high on the impulse leg like that. Look for your 61.8 or look for your kill zone, those two red lines, okay, 71 to 88. That's a kill zone. There's a strategy all by itself for that. So whatever route you go, just know that you want to go for the discount, right? Because even on the smaller time frames, there's still essentially curve analysis, right? Where's my swing low? Where's my swing high on that impulse leg? If I'm buying, am I buying at the top of that curve, or am I waiting for price to give me a discount? Let the market come to you. Oh, you're looking on the sell side, retro. Is that right? Yeah, I mean, look, if we're obeying what our boss tells us, which is Edgefinder, I look at the Edgefinder as my boss, guys. I do what it tells me to do. Okay, even in trading, we need to have a boss, because if we're our boss on certain aspects of trading, then we're gonna do things our way. We're gonna break away from the mechanics. Right? Got to have a mechanical system. So for me, dollar yen is very clearly at the top of the list. as a bullish. So just be careful if you're short this asset. Because the fundamentals and the, sentiment's pretty much giving us a neutral reading, but between the fundamentals and the technicals, we're getting a pretty strong read. Okay. So yeah, this is my boss. I obey my boss. Okay. And then, like I said, as far as my 9,000 alerts that just hit over here on the right side, all 7 of these at the top have hit in the last, well, I should say these top 5. I had 4 hit in a 10-minute stretch. Now I'm in 2 trades, so I'm not too interested in getting in a second trade because I'm already in 2. It's honestly quite rare that I'm in 2 trades at once, to be honest with you. I'm usually just in 1 trade, but hey, every now and then I'll be in a second trade or even 3. I've been in 3 trades a few times, but that's a rarity, maybe once or twice a year as far as 3 trades. But 2 trades, just a handful of times throughout the year. I usually just focus on one asset and one asset alone, with the daily 4-hour confluence, I should say. It's a little different now that I'm playing around in the 15-minute time frame with the new structure, the new the lessons I took away from this 4-day class I told you guys I went to a couple weeks ago. So, but let's just, first of all, let's get connected here. Take a look at a couple of these. We got about 4 minutes left, and then we'll be out of here for the day. But yeah, here's Aussie Yen just hit. Now, Aussie Yen has given us a +6 bullish score. So what happened? Well, we dropped into a demand zone here. And look how hard it rejected, guys, just since I've been on air with you. So that's a 1-hour time frame. 15 minutes, okay? Look at 15. Let's look at on 1 minute. Okay, 1 minute, the VIX is going crazy. It's throwing stuff all over the place. What happens when it hits a demand zone, a strong demand zone? Bounces. Okay? That's demand zones for you. That's supply and demand zones for you. So it's FOMO. Assuming I was not in these 2 trades, guys, that's FOMO at this point. If I chase that, because look, think of it this way. Beyond just the fact that it's obviously a much more expensive price, but if I look at the relationship from demand to supply, or in this case, support, because I don't really see anything strong up here as far as a supply zone. So I would obviously look for a take profit on this trade, basically at the top. But look, it's already taken away half my reward, right? This is where FOMO can really cost you money. I mean, if you miss the trade initially and you don't notice it until prices already went away, well, it's already taken away, the bulk of a lot of your earning power on this. Again, we go back to that 1 hour. Demand to support, it's right in the middle. Okay. No FOMO. No FOMO. Okay. So that's Aussie Yen. And what's the other one? Dollar Yen. Yeah, we already went over that one. Gold is recovering, eh? Let's have a quick look at it. Gold. Oh, that's Bitcoin. Go to gold. Okay. So over here on gold, looks like we had a dip and then a pop, like you said. Still pretty neutral as far as Edge Finder is concerned. I think we're still chilling around 0, if I remember right. Somewhere in it. Okay, we're at +2 now, so still neutral though. But from a technical aspect, yeah, still kind of keeping an eye on this demand zone all the way down here. I do believe that was a smaller time frame. It's a little narrow. Yeah, I just don't like it. It's too narrow of a zone, guys. I want the zone to be, a decent size depending on the structure of the overall move. And right now, looking at gold, excuse me, we had that break of structure, that liquidity. We had the retracement. And now we're just kind of being lazy. So yeah. And it's a little expensive. Okay, price is kind of high up on the curve. If we take a step back, look at a daily chart, look at swing low to swing high, right? Swing low, swing high. We're still in the top third quadrant, right? So that's the premium zone. That's the sell zone. Now, obviously, that's just from looking at it just from a structure point of view. Obviously, we got all kinds of different strategies we could use. And that's why I personally was looking at that zone down here. So that is still a potential play. I mean, look, we got the 200 EMA just about to cross into this smaller time frame demand. So, on let's just say we had a bullish signal on this thing. Okay, well, if we had a bullish signal on this thing, it's just a simple drop in demand zone, 200 EMA pierce. Look for something like a 1 hour close. Buy the break out of that possibly, or we get the new impulse leg created right here. Okay, and then retrace to a demand zone or get a discount. That's a potential play. But again, it's not even on the edge finder. So my boss is telling me to stay the heck away from it, right? So anyway, guys, my time, it looks like, is up already. So I'll let you guys know tomorrow how we're doing over here. Oh, Swiss yen actually went back into profit, so that's nice. I'll let you know how these two trades went. But other than that, guys, just be careful. Again, not on the list over here as far as this unsettlement for the summit thereafter. So be careful today. And with that, have a wonderful day. We'll be back on tomorrow. Peace.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.